your headlines. On the lookout, Jay Powell reiterates the Fed is monitoring inflation risks, describing the current price surge as unique. Treasuries trim their advance. Reigning in Russia, Angela Merkel and Joe Biden agree they won't allow the Kremlin to use the Nord Stream 2 pipeline to threaten its neighbors. And President Biden warns about the risks of doing business in Hong Kong. But Bloomberg sources say China will exempt IPOs in the financial hub from the strictest cybersecurity reviews. Good morning, everybody. Let's take a look at your futures then. Just 15 seconds to go until the start of the last trading session for cash equity markets of the week here in Europe. And European equity market futures have been pointing to the upside. But bear in mind, we lost more than 1% on some of these markets in yesterday's session. We were weighed down by energy stocks, which in turn were weighed down by concerns around commodities. Commodity prices spiking, not entirely positive for everybody in that commodity-related space. We saw renewable energy businesses under pressure as a result of concern about higher cost levels, spending on commodities, spending on those basic resources. That was something that weighed on the markets yesterday, so we'll keep an eye on that. This is the picture then, just starting to open for European equity markets. So looking to rebound a little bit from yesterday's losses. The FTSE 100 up by 0.5%, the CAC 40 up by 0.5%, the XETRA up by 0.3%, the IBEX up by 0.4%. We're just seeing some commentary coming through from E.ON, one of the energy providers over in Germany, about the extent to which flooding in Germany is causing power supply cuts. We'll continue to monitoring that dreadful flooding story, loss of life and many people missing actually there and in Belgium. So we'll continue to monitor that story and see what updates we get for you. In terms of markets this morning, we are seeing then a bit of a rebound from yesterday's losses, ongoing focus on inflation because we've heard from Jerome Powell over during yesterday's session. Let's get to that conversation then. Fed Chair Jerome Powell has been defending the central bank's stance to keep supporting the US economy, even as inflation runs at uncomfortable levels.
This is a shock going through the system associated with reopening of the economy, and it's driven inflation well above 2%. And of course, we're not comfortable with that. This particular inflation is just unique in history. We don't have another example of the last time we reopened a $20 trillion economy. We're trying to both understand the base case and also the risks.
Meanwhile, both St. Louis Fed President James Bullard and Chicago Fed President Charles Evans spoke about beginning to taper.
I think we're in a situation where we can taper, and I think setting those parameters the right way. We don't want to jar markets or anything, but I think it is time to end these emergency measures.
If unemployment is at 4.5% at the end of the year and things are progressing the way that I'm expecting, I would guess that some adjustment would be in order somewhere in that time frame, probably. But it's going to depend on the data. That's the whole point.
Janet Mui, Bruin Dolphin Investment Director, joins us now. Janet, good morning. Thanks for joining us this Friday morning. So give us your thoughts on just how transitory you think inflation will be, or at least when we'll know. When will the Fed give us more clues on their conclusions on just how transitory the inflation push has been?
Hi, good morning, Anna. Well, we continue to think that inflation is transitory. We are seeing the shocking data from the U.S., primarily because of the reopening of the economy and the ongoing supply shortages in chips or labor. We continue to see that in the latest set of the US CPI data, which reinforces our view that most of the main drivers of inflation currently is transitory. So we are likely to see inflation remain elevated, but we believe that it is probably peaking as we start to see some peaking in the activity data, whether you're talking about the ISM or the PMIs. And we expect that after the extra unemployment benefit ends sometime in September, then there will be more labor coming back into the U.S. labor market. So I am with the Fed Chair Powell's view that the inflation is transitory, and we're coming out of once in a generation pandemic. So there's a lot of uncertainty surrounding the price prediction. But we think that the Fed would the patience. There is no urgency in scaling back that extraordinary measure. Of course, we know it will happen at some time, but we just have to wait and see the upcoming data after the fiscal stimulus starts to fade towards the end of the year. And I mean, ultimately speaking, the fact doesn't, I mean, the data policy doesn't really help with the issues that we're facing, for example, supply shortages in chips.
Yeah.
That's not something that monetary policy can solve.
Right, and thinking about what monetary policy can solve, Janet, there's been a lot said about how the Fed wants to have, focus on unemployment and wants a really inclusive recovery. So they want all sections of society to participate in this recovery. Is there a danger, though, that by waiting to taper, by waiting to withdraw extraordinary stimulus, you then inflate asset prices and then you're at risk of actually exacerbating the wealth divide? Is that something that's going to have to feature as part of the conversation as we go through the summer?
Yeah, I think absolutely. I think inclusive recovery is something that the Fed is closely watching, and it's become a very important agenda, basically. And from what we see coming out from the pandemic, there has actually been more inequality in terms of wealth, not just in the US, but globally. And arguably speaking, that is part of the problem of the extremely accommodative policy, especially that is very notable in the housing market, where you saw, despite the pandemic, actually housing market globally have hit records. There has been unprecedented demand in terms of mortgages, and there are housing shortages as well. So this is something that certainly the Fed will have to keep in mind of.
Given the moves we've seen in bond markets, Janet, the very low bond yields we still have here, 131, yes, there's concerns about growth because of the Delta variant and the spread of that. But does that explain all of the strength that we're seeing in fixed income markets? Does it explain why we have interest rates so low, why we have the US 10-year at 1.31%?
Yeah, I think that part of the reason, as you mentioned, is that ongoing uncertainty with the Delta variant, but I don't think it will be a big part of that because we have the vaccine solution, which some of the vaccine already said that it is effective against the Delta variant, but it is an ongoing uncertainty. And I think that because the price increase has been coming from, say, the supply side, which you're talking about the oil prices or the supply shortages, and that potentially can depress consumer real spending power. Most notably the oil prices. If you continue to see that gasoline price increases, then the U.S. consumers, in terms of their real spending, is likely to be less, and that is likely to lower that growth expectation, which likely have dragged down that U.S. 10-year nominal yield.
Janet, thanks very much. Stay with us. Janet Mui, Brewin Dolphin Investment Director, with us this morning on the European Market Open. We'll get further thoughts from Janet shortly. Coming up on this program, China plans to exempt companies going public in Hong Kong from first seeking the approval of the country's cybersecurity regulator. We'll get the details of what that means next. This is Bloomberg.
up to Maine and had a lobster. And it's not as romantic as Lisa going to Greece.
Tom Keene says what?
You mentioned Maine and the lobsters up in Maine. Well, they can't compare to what you can see in Greece. Even better, I can't pronounce it. Astracoma carinata.
I nailed it.
It's not thera, whatever. Astracoma.
You're nailing it.
Carinata.
You're nailing it.
We're figuring out the hard stuff for you on Bloomberg Surveillance. Mornings on Bloomberg Television and Radio.
Welcome back to the European Market Open. Just coming up to 10 minutes into our European trading session, and European equity markets trying to regain a little bit of the lost ground of yesterday, not managing to do that to a great extent. We're up by just 0.1% on the Euro stocks, on the Stocks Europe 600. The FTSE getting the best of the gains, up 0.25%. The DAX fairly flat this morning. Let's have a look at some of the stocks that are on the move, though, this morning. And we'll start, I think, with Ericsson. There we are, down by 6.5% this morning. The Ericsson story this morning, Q2 adjusted operating profit missing estimates. We're getting lines coming through from the Ericsson CEO at this point saying the company has great momentum in the United States, expect a limited loss in 2022 in digital services. We're also getting comments from certain shareholders in the business talking about the Q2 being strong despite FX headwinds, but we will keep an eye on the Ericsson share price. That's certainly on the slide. Let's have a look at Swedbank as well. We talked to the CEO of Swedbank a little bit earlier on about the housing market there, about the extent to which the card activity, which had been strong, was sustainable. He also wanted to talk about, or he talked to us about looking forward to paying a dividend, pending an FSA go-ahead, of course, because like many banks, many banking sectors, they are subject to approval from regulators to pay those dividends, given the pandemic we've just been through. And you can see that the share price has moved to the upside, up by 2.6% on the back of all of that. Let's also focus in on travel and leisure. IAG, one of the stocks on the move this morning, moving higher as a result of perhaps some of the commentary that we've heard from President Biden. He was talking about travel with Europe. He was doing that in the context of a meeting with Angela Merkel, so we'll see whether he was really talking about the EU or whether he's talking about the UK as well, whether the US will treat them the same or not. We've got IAG up by 3.25%, Lufthansa up by just over 2%, but there's a lot of talk about when we're going to see transatlantic travel essentially reinstated and the ability of Europeans to visit the United States. Now, China plans to exempt companies going public in Hong Kong from first seeking the approval of the country's cybersecurity regulator, removing one hurdle for businesses that list in the Asian financial hub instead of listing in the United States. Beijing is overhauling the way it regulates IPOs as part of a broad campaign to tighten oversight of its big tech companies that control reams of valuable user data. Janet Mui, Bruin Dolphin Investment Director, is still with us. And Janet, I know you've been giving some thought to the way that we've seen Chinese tech stocks respond. What do you think the international investor has learned over the last few months or so about Chinese tech stocks and how much exposure they want to have to those Chinese tech names?
Well, I have to say it is a disappointment so far because there are just a number of occasions which continue to disappoint the credibility of the listing of these giant tech companies from China. So we've got the failed IPO of Ant, and we've also got the disaster from the Didi because the share price had fallen substantially and international investors just incurred a huge loss. And I think it really reinforces to us what we were fearful of, which is that China is tightening its grip on its tech giant and it's not going away. It's not bottoming yet. I think it is going to be ongoing. And the end game is really to incentivize these innovative Chinese companies to list internationally outside of China because they want to make sure that the success and the capital is being brought back within its territory. So I think this is a trend that is unlikely to reverse. We've seen signs over the past few years already with China setting up the STAR board, which allows these high-tech growth companies to list domestically, but maybe that is not achieving what the Chinese authorities would like it to be. So now they're just having a tighter grip and more scrutiny on this aspect. So we think that investor confidence has definitely been affected negatively.
So investor confidence has been knocked on that front. Where do you have more confidence then? In terms of the sectors that you want to buy at the moment, Janet, you advise discriminating between industrial cyclicals. So some you like and some you don't. How are you discriminating within that sector?
Yes. Well, so at the start of the year, we have turned more positive on the value cyclical sectors because we believe that it is a very strong economic rebound. It will lift most boats when you have a rising tide, right? So we think that we still have a very strong economy, but we think that from the data, it is telling us that it has peaked already. And some of those really cyclically exposed or value stocks have actually lost momentum. And we think that the catalyst of that has gone. But equally, we don't think that the cycle is over yet. So you just have to be more discriminate in terms of picking your cyclical stocks. So in terms of cyclicals, so we have preference on banks, financials, energies, but we think that those already have done very well, and the catalyst probably is kind of gone. The bond yields have fallen, so that's not necessarily a great thing for banks. And then you've got the oil price, probably peaking with OPEC plus potentially giving out more supply. So you probably lose a bit of momentum on the energy side. So we think that the ones that can benefit is the industrials, because there's still lots of cash from the corporates that can invest, and also from a lot of global governments as well. And we believe that we're picking the more quality cyclicals, which have strong balance sheet, strong cash flow, and can provide steady income growth irrespective of the economic environment.
Janet, thank you very much. Janet Murray, Brewin Dolphin Investment Director. Thanks for joining us. Janet will be continuing her conversation with us on Bloomberg Radio at 9 a.m. UK time. I look forward to speaking to her in around 45 minutes time then on Bloomberg Radio. Now, one of the world's largest alternative management firms has seen its profits and assets under management surge to new highs during the pandemic. In his first interview as CEO of the private equity powerhouse, he spoke to Bloomberg's Jason Kelly about the vision for the business.
It will continue to be a hugely important business. It is a massive source of profits for ourselves and our clients. It is, as important, a massive source of intellectual capital for every part of the firm. It is just not the same growth trajectory as some of the other businesses, but nor should it be.
Yeah.
Now, we, at the end of the day, we've made a decision. We serve clients, and our job is to serve clients and provide them excess return. Accepting more capital in excess of the opportunity available just means returns go down. So private equity is a little bit like the farming business. You plant, you harvest, you plant, you harvest. The business goes up, you sell things, it goes down. That is just the nature of the business. And for as much as people have said, and I've seen a lot of the press, too much money chasing too few deals, I think I joked with you previously that I've been hearing this for 36 years.
Right.
When I arrived on Wall Street in 1985, I said, oh my God, I'm 10 years too late. Every good deal's been done. And in 1990, when we started Apollo, I was a junior person. I was like, wow, I'm just too late for me. And 2001 was actually the funniest. 2001 followed the collapse of Internet 1.0, the telecom bust, the events of 9/11, and a lot of GP mistakes across the board. Some firms actually disappeared as a result of their performance. And GPs were telling LPs that the new private equity model is 15%. And I was on a panel with, I think, the head of New York State.
15% returns.
That was it. That was what GPs were telling LPs. And Apollo was seated next to the host. And then, Bain, Blackstone, Carlyle, down the row, it's kind of the murderer's row of investors. And so I was asked the question first, what do you think returns are going to be going forward? And I said, I think they're going to be amazing. I think they're going to be 20% plus. And all I heard was, and that was the sound of everyone's head hitting the table going down the row. And in that fund, which was the 2001 fund, 44% net returns. So now you fast forward and you look at the last 3 funds we've done, big funds, 15 billion, 16 billion. The most recent fund, 25 billion, excuse me. For the last time we announced results, 44% gross on the $25 billion fund, high 20s net. The world just keeps moving. The world just keeps changing.
Right.
It's our job to continue to reinvent ways to extract and to produce value. Now, for us, the way I define our strategy is purchase price matters. Some people call that a value investing strategy. But value investing does not mean you only buy value-oriented companies. You want growth. Of course, everyone wants growth. You want to buy technology. You want to buy into change. But purchase price matters. And so you do the Tech Datas of the world. You do the Yahoos of the world. You do a series of transactions where you think as a result of complexity, as a result of something being misunderstood, you can derive excess return. So I am very positive on the business. I think it will continue for a very long time. I think we will continue to see articles of too much money chasing too few deals, and it will continue in a 35-year unbroken trend of people being wrong about that.
That was Mark Rowan, Apollo co-founder and CEO, speaking exclusively to Bloomberg. I forgot ahead of that tape to tell you who we were going to hear from, but that's who that was. Interesting conversation there. Now, coming up on this program, it's been a good earnings season so far for luxury stocks, with Richemont and Burberry both reporting surging sales. We see different responses in the share prices, though. We'll talk about that next. This is Bloomberg.
Sem se apresentar, as escolas estão começando a reabrir, os teatros não vão reabrir tão cedo. Aí a gente teve a ideia, no melhor estilo Minuto Nascimento, vamos levar a música aonde o povo está.
Minha missão hoje é fazer as pessoas sorrirem, cara. Sorrirem, olharem da janela, verem uma coisa inusitada, ficarem felizes, mandarem para os amigos e, enfim, curtirem um momento diferente, mesmo dentro de casa.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
A shock going through the system associated with reopening of the economy. This particular inflation is just unique in history.
It's a loaded word, transitory.
We need some optionality on the upside with respect to possible inflation shocks.
The thoughts of Fed officials there, their take on the inflation outlook, how transitory it will be, how much policy flexibility does it require. We are now 23 minutes into the European trading session for this Friday and bouncing a little across these European equity markets. The Xetra DAX clawing its way up 0.3%. Elsewhere, we're up around 0.5% on the major markets. We're getting some upside from some of the luxury names, although actually we have quite a divergent performance. It's been a good earnings season. The stories have been good so far from luxury luxury companies, Richemont and Burberry, both reporting surging sales. Shoppers are returning to stores as lockdowns ease in many key markets, but uneven recoveries mar the sales numbers. Joining us now for more is Bloomberg's consumer reporter, Corinne Gretler. Corinne, nice to speak to you. So what were the top lines then coming out of Richemont, Burberry, two luxury names we heard from this morning?
Hi, yes, so Richemont, which makes Cartier jewelry and IWC watches, saw sales more than double to about $5 billion in the 3 months through June. And that's compared to a year earlier. Remember, everything was shut. So that jump isn't necessarily surprising, but they were also up 22% higher than the same period in 2019. And that's really what's important. And at Burberry, sales almost doubled in that same period. Analysts are expecting that we're going to see a lot of historic growth results actually in this coming earnings season. And of course, nevertheless, the most important thing is that there are signs of returning to pre-pandemic levels.
Interesting, of course, that the story hanging over Burberry is around management. We're seeing lines coming through from the Burberry CFO, Julie Brown, saying that Gobbetti is going to lead the company until year end. So just reminding everybody of that and saying Burberry is fully capable of managing the transition, but we wait for news on his successor. What are the trends that we're seeing, though, in terms of the action at the storefront then? What are the trends that we're seeing as shoppers return to stores?
Well, they are definitely hungry for luxury goods. They're emerging from all these restrictions for more than 1.5 years. Vaccination campaigns are accelerating. There's a real feel-good factor in the air as these curbs are being eased. And even though e-commerce was the star of last year, they're really returning to brick-and-mortar stores. And lots of consumers, have saved up a lot of cash during lockdowns. Maybe they didn't go traveling. And they're more than happy to be splurging that and treat themselves, especially now that they're meeting people socially again and going back to the office.
Yeah, maybe a handbag lasts longer than a week in the sun. Corinne, thanks very much for joining us. Bloomberg's consumer reporter, Corinne Gretler. Thanks for bringing us the latest on the stories behind the moves in luxury stocks we're seeing this morning. Coming up on this program, South Africa is pushed to the brink as police fail to contain rampant looting and arson. What has been driving this? How much is this affecting daily life in South Africa? We'll get an update from on the ground on that. We'll also talk about the investment approach to South Africa right now. Scenes like this, what does that do to international investors and their willingness to put money into the South African economy? But first and foremost, of course, we'll cover the violence that we're seeing on the ground and think about what that is driven by and where it ends. This is Bloomberg.
E3 is entirely online, ostensibly because of the pandemic, but in large part, we're seeing a massive pivot to mostly live streams for video game coverage. We're going to be all online instead of in the convention center for the first time this year, and that promises to be a really different experience.
video game industry has really been interesting during the pandemic. It has actually grown substantially since everyone was stuck inside. And of course, this makes sense, right? We're all looking for some amount of entertainment, and stuff like Fortnite in particular offer also a social component, right? People can join up and kind of meet up online and spend time with their friends. So in a lot of ways, this all makes sense.
The curtain will rise again.
Broadway's returning June.
Have you bought tickets?
It's busted out.
You've got more time here.
Commodities are up.
Keep going.
To the moon.
Beautiful.
Bloomberg Surveillance, weekday mornings on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the European Market Open. Half an hour into Friday's session, making some gains, rebounding a little from the losses of yesterday, up by 0.2% on the Stocks Europe 600. Some of the best gains coming through on the FTSE 100 this morning. Let's have a look at the GRR function then on the Stocks 600, have a look at the sector breakdown, and we see that travel and leisure is doing well today. This perhaps on the back of those comments from President Biden about the conversations that are happening about trying to open up transatlantic travel between Europe and the United States. Real estate also moves to the upside. Financial services also a little bit higher. We spoke to Swedbank earlier on. That stock is moving higher. We talked to the CEO there about expectations for dividend payments. Only a few sectors actually in negative territory. Basic resources to the downside, but London withstanding that downward pressure. Banks fairly flat as well. Let's get a Bloomberg First Word News update. Here's Laura.
Thanks, Anna. President Joe Biden says his administration's issuing an advisory to U.S. companies about what may happen if they do business in Hong Kong. Speaking at the White House during a bilateral news conference with Chancellor Angela Merkel, he said the situation in the financial center is deteriorating and the Chinese government is not keeping its commitments to Hong Kong. German Chancellor Angela Merkel has pledged swift help for people affected by devastating floods in Western Germany. She called the situation a catastrophe. At least 80 people are dead and dozens missing due to the torrential rains. The floods also swamped parts of Luxembourg, the Netherlands, and Belgium. Jeff Bezos' space company, Blue Origin, has picked an 18-year-old for its first crewed mission to space. Oliver Dahlman will accompany Bezos and two others on the flight scheduled for July 20th. The company says he'll be the youngest person ever in space. Oliver's ticket was paid for by his father, Joe's, who is the CEO of Somerset Capital Partners. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thank you very much. Laura writes here in London. South Africans are expected to face major food and fuel shortages following days of violent unrest across two key provinces. Rioters upend supply chains by looting supermarkets and torching goods trucks. More than 1,400 people have been arrested since violence erupted after former President Jacob Zuma was jailed for contempt of court. Joining us now from Port Shepstone, where rioting has been taking place, is Thembile Sile, Bloomberg's government reporter in South Africa. Thembile, good to speak to you. So talk us through the situation as it stands at the moment.
Morning. So we've got a relative calm following the days of unrest that you have mentioned. By relative calm, I mean that we've not seen any incidents overnight, such as fresh burning of buildings, any looting. But government is maintaining that at least one of the two affected provinces, that would be KwaZulu-Natal, remains quite volatile. I think the immediate concern now, you mentioned the issue of food security, is the normalcy that we have not seen yet is the opening up of major freeways where trucks need to move in order to replenish stocks across the country and other provinces unaffected, as well as those within the two affected provinces where they need to be replenished. Of course, even warehouses were looted, and so there's absolutely nothing on many, many shelves. The other issue, of course, is getting fuel from the coastal province of KwaZulu-Natal into the more inland provinces.
Thembile, we see images of police taking action, but really fast-moving scenes of looting from days earlier on this week, I think. What has the government's response been? I know they put police on the street and then they put army on the street and more army on the street, but what has the South African government been doing?
So I think the government's response, widely criticized by commentators, slow off the mark. In the earlier days, we saw police completely overwhelmed by the sheer number of people that were looting on stores. You rightly mentioned that the soldiers were then called in. We're currently at a contingent of 25,000 soldiers in the streets. And I think the key priority now would be to prioritize safeguarding key infrastructure points, and that's where soldiers have been deployed, things like the major highways, the ports of entry, airports, those sorts of national key points, as we call them. That is the priority of government. They are also maintaining that these demonstrations are not the socio-economic challenges that have been a concern for commentators, termed as a ticking time bomb for many years. They instead are insisting that this is orchestrated and well-orchestrated economic sabotage.
Right, yeah, there has been plenty of talk about the extent to which this was spontaneous or orchestrated, the links to the previous Zuma administration, much talked about, I know, in South Africa. Away from the politics, though, Thembile, what about the economic consequences of this? This comes at a time when the economy is still struggling to fight the coronavirus pandemic.
Absolutely. We are in the third and deadliest wave of the virus driven by the Delta variant. Just last year, we had 600,000 jobs lost in the informal sector, that is. Unemployment is at a record high of 32.7%. So these riots are going to have a devastating impact on the economy. Commentators are saying that a further 0.4% is likely to be shaved off of this year's GDP, concerns around investor confidence given the damage that we've seen to infrastructure. So the cost of these riots is still to be quantified, but it's obviously going to run into billions. I think the retail sector alone has already indicated that they have suffered loss in excess of $343 million, and that's, of course, we still to consider the loss of jobs that will follow that inevitably.
Thembile, thank you very much for the update. Thembile Sile, Bloomberg's government reporter in South Africa. Joining us now for an investor perspective is Fanny Titi, the Investec CEO, a big finance business, of course, operating in South Africa. Fanny, really nice to speak to you. I want to get to the investor sentiment. I want to get to what this means for clients and the economy. But first, your take on the violence and your hopes for an end to it, I suppose.
Yeah, good morning, Anna. I must say that we were quite shocked to see the scenes that we have seen on our television screens and to see the level of anarchy, chaos, and looting. And I must say that the response from government was very slow and it did not have the right scale. In a crisis, you need to respond quickly and to respond with maximum capacity. As a fire starts to burn, it's easier to contain it early as opposed to letting it run and try later on to contain it. So it's been a difficult time for our people in both Gauteng and in KwaZulu-Natal. We feel now that there is a level of calm that is beginning to emerge, with a lot of security forces being deployed in the two provinces. Clearly, there's been a lot of damage to infrastructure and in particular to confidence.
Yes, indeed. Tell us about that investor confidence, international investor confidence or domestically, Fanny. What are you seeing on that front?
I think both would have been impacted quite severely. I think if we look at the situation going forward, we'll have to rely on domestic investment first, because international investors would like to see a level of stability return to the country. Obviously, from a domestic perspective, we require safety and security. We require critical infrastructure to be secured. And we also require a level of relief that should come into the communities that are affected. If there isn't food relief, because the supply routes are still not operating, I think that would spawn a new problem. Because if people are without food in some cases, there may be shortages of fuel and even water. If those are not taken care of, we would have a much more serious problem. And if relief is undertaken, we then can get to recovery. So domestically led in terms of recovery, and in time, international investors will come back. But the country has been damaged, and the government has to show a level of urgency in stabilizing the country. In Gauteng, things are better. In KwaZulu-Natal, as your reporter has said, things are better, but there are still sporadic acts of violence, and the government has to round up the instigators of the violence that have taken advantage of conditions of poverty and the normal fissures that you will see in a country that has a third unemployment where inequality is very high.
Fanny, what do you think has driven or sparked this violence? And I ask this because I know it's much debated, the extent to which this has been spontaneous or whether it was orchestrated. I think there'll be many in the international community who'll want to get a better understanding of what's been driving this, because it leads to conclusions about how robust the South African democratic system is.
Over the last few years has been, in my view, a contestation within the ruling party. And that contestation has normally led to slowing in terms of government policy reforms that are required to create economic growth. So over the last few days and weeks, as you know, the former president of the country has been found guilty of contempt of court. He's also in front of the court charged with corruption, and on the latest issues around contempt of court, he's been jailed. And there clearly has been a lot of agitation from some in the ranks to get him released and to make the country ungovernable. Why would ordinary people sabotage, for instance, infrastructure relating to railways, relating to distribution centers, relating to cell phone towers? Ordinary people wouldn't do that necessarily. So there clearly is a level of coordination by very experienced actors. So there was a movement afoot to destabilize the country. That clearly seems to have failed at the moment, but government has to respond much quicker next time there is an issue of this nature.
What do you think would prove or secure Ramaphosa's position at this point, Fanny Titi? What would be the measures we need to see taken first, or the things that need to be done first to secure his position?
As I said, first and foremost, we have to get security and safety. We have to make sure that there is no further damage to critical infrastructure, and we have to make sure that poorer communities can get access to food relief and to services in the next week or two. If that happens, business will be ready to start to rebuild where there has been this level of damage. Clearly, there has to be a riot insurance that pays out on the damage that has been caused. But in the long term, we have to grow the economy at around 5% to absorb the level of unemployment that is in the country. If this level of unemployment remains, there will always be the opportunity for bad actors to exploit that and to cause instability.
Thank you so much for joining us. Really good to speak to you. Fanny Titi, the Investec CEO, joining us this morning to talk about the violence we've seen in South Africa, what's been driving it and what could bring it to an end. More on the markets next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Welcome back to the European Market Open. 45 minutes into Friday's session, and European equity markets making moves to the upside, up by 0.2%. Not so for the telecom equipment maker Ericsson. That stock down by 9.7%. We had an update from Ericsson overnight, giving us the latest on their performance. Ericsson shares slumping to a 4-month low, I understand, as China woes way. So difficulties in that particular market weighing on the stock today. Now, the countdown to the Summer Olympics is on, and Tokyo's governor sees the virus-delayed games becoming a beacon of hope amid the pandemic recovery.
The vision for the Tokyo 2020 Games is, as you know, unity in diversity. And I'm very glad to say that it will be the most gender-balanced games in history and following in the footsteps of the Rio Games. And a team representing refugees will also participate. As we are once more in a global pandemic, and I want to make the Games an event to serve as a beacon of hope, to show that the world comes together to face the difficulties of COVID-19.
1 week ahead of the opening ceremony, how are you feeling about really going ahead with the Olympics?
Well, but can I talk about a little bit more about the sustainable recovery? Because the idea for hosting the Games originated as the recovery Olympics and Paralympics following the Great East Japan earthquake, which occurred in 2011. And we aim to encourage the regions through the power of sports, and at the same time express our gratitude to the world for their support by the strong steps taken forward, taken toward reconstruction from the disaster. And while we regrettably cannot welcome spectators at most of the venues this time, we are preparing to create a new way for audiences around the globe to enjoy the games, and we are especially working to strengthen online information broadcasting to people worldwide. And during the period of the games, briefings will be released online every day through the Tokyo Media Center, or TMC, and which is run by us, TMG. And I'd like to invite members of the media, from around the world, to use the TMC to view the attractiveness of Tokyo.
So, well, how are you feeling now, just 1 week ahead of the opening ceremony?
Well, we are preparing whatever the circumstances is, and the success of the games lies in the excitement and emotion created by the competition of the athlete. So we are welcoming all the athletes and those people from the IOC or international federations, and those who are working for the games, and in order to make this a place where athletes can deliver their best performance, we will work with all parties involved to host safe and secure games.
Yeah, so there has been a lot of criticism about Japan's vaccination rollout being slower, especially versus other G7 economies. Is there anything that the Tokyo government is doing separately in order to accelerate the pace of the rollout?
Yes, we do the best, and we are accelerating the pace of vaccination as much as possible. But the point is that, as you mentioned, that the start of vaccination was a bit delayed compared to other major countries. But we are accelerating dramatically.
That was Tokyo's Governor Yuriko Koike speaking there to my colleague Sherry Ann about the Olympics, just 1 week away today from the opening ceremony. Coming up on this program then, investors gear up for the Bank of England to tighten policy faster than the Fed. We discuss that with Laura Cooper from our Markets Live team next. This is Bloomberg.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
A shock going through the system associated with reopening of the economy. This particular inflation is just unique in history.
I wouldn't be so concerned about an inflation pickup because there will be inflation pickup, for sure. That is something that we regard as transitory.
It's a loaded word, transitory.
It may become appropriate fairly soon to withdraw some of the current monetary stimulus in order to return inflation to the 2% target on a sustained basis.
We must have a much more forceful and protracted monetary policy stance that may even imply a moderate and temporary period of higher inflation above the target that we have.
The thing, this is very uncertain.
We need some optionality on the upside with respect to possible inflation shocks.
some of the central bank officials that we've heard from this week giving their takes on the inflation outlook. Of course, it varies depending on which geography you're thinking about, and some of them were talking about their own geographies there, so the stories won't necessarily be the same. But we're 53 minutes into the European trading day, and let's reflect on one of the voices we heard there. Laura Cooper, Bloomberg's MLive macro strategist, joins us this morning. And Laura, I'm thinking about the comments we got from Michael Saunders and how much those, along with other comments from Bank of England officials just this week, have reset expectations around the BOE. Have your expectations been reset?
Well, I mean, those hawkish comments from BOE members does come after we saw a very strong inflation print this week. We did see employment gains going for the third consecutive month. So it's really the combination of that inflation picture coming in stronger than expected and that ongoing labor market recovery that is underpinning these comments. And we are seeing that feed into what markets are expecting. So we now see markets are pricing in about 15 basis points of rate hikes by next May, which is quite a material move from what we saw earlier in the week. And so I do think this does set up for a potentially more hawkish Bank of England when they meet in the first week of August.
Yeah, interesting to think about the contrast then between other central banks. So if investors are bringing forward expectations of hikes from the Bank of England, that then has led to the US yield premium between the US Treasury market and the gilt market falling. How do you view that contrast then, that timing difference maybe between the Fed and the Bank of England?
Well, I think there's two key components of that. One is the average inflation targeting by the Fed, which is quite in contrast to what the Bank of England is saying. But I think, again, it's just this puzzling price action that we are seeing in treasuries, which does suggest that bond markets are already pricing in kind of this peak growth, peak inflation narrative. And it's likely too premature for that to be the case. But as we do see Fed Chair Powell continue to have that dovish stance, they do still see inflation pressures as transitory, largely reflecting this reopening, these base effects, these supply constraints that should eventually ease. They do expect that that is going to ease, so they won't have to actually taper that bond buying anytime soon. So that's why we are seeing just that contrast play out across the Atlantic in terms of those nominal yields.
And of course, the ECB on a different page. We'll hear more from them next week. Laura, thank you very much. Laura Cooper, Bloomberg's Markets Live macro strategist. Thanks for joining us on the European Market Open. That is it for the European Market Open, just coming up to 9 o'clock here in London, 10 o'clock if you're in Paris or Berlin. Surveillance Early Edition is up next. They will be watching these markets for you, of course, looking at the bounce that we're seeing across European equity markets this morning. We are seeing the FTSE 100 moving to the upside, quite substantially, up by 0.6%. But some of these markets not making up for the losses of yesterday. That is it for me today here on Bloomberg TV. This is Bloomberg.
Happening in the business world right now is how to get workers back to work and what benefits to give your employees. Microsoft is asking employees to be back in the office 51% of the time, but you're flexible about the rest of the time. Is that a permanent policy? And for those companies that are saying you have to be back in the office 100% of the time, Are they on the wrong side of history?
I think we at Microsoft, we want to be much more data-driven. I also think that in time, if a year from now, we will have more sense of what the real structural change and needs and the expectations of both our employees and our customers are. And we'll really think about long-term policies based on, quite frankly, having all of that data behind us, because otherwise I think we are trying to come up and being too overly dogmatic when I think we need to be more experimental in our approach to return to work, because I do fundamentally believe the world's changed.
People ask me all the time, what is the key to being a really good investor? I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
You should never invest in something that can't be simplistically explained to you. The very, very good investment advisors can take complex matters and make them very simple.
That is something that we regard as transitory.
This particular inflation is just unique in history.
We must have a much more forceful and protracted monetary policy stance.
This is Bloomberg Surveillance, early edition with Francine Lacroix.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Friday, the 16th of July. Happy Friday to all of you, either on holiday or in the office. I have to say, this Friday couldn't come soon enough. Now, here's what's coming up on today's program. We start with Jay Powell reiterating that the Fed is monitoring inflation risks, describing the current price surge as unique. We'll also hear from our interviews with Fed presidents James Bullard and Charles Evans. President Biden warns about the risks of doing business in Hong Kong, but Bloomberg sources say that China will exempt IPOs in the financial hub from cybersecurity reviews. And as billionaires raise their heads above the clouds, an 18-year-old is said to be the first paying customer to go into space. What's next? Frontier for the orbital economy. I have to say, we profiled the 18-year-old. It's just such a fantastic story. You can follow that profiling here on TV, but also on our Quick Take channel on Twitter. Now, let's get straight to one of our top stories. And China plans to exempt companies going public in Hong Kong from the first seeking the approval of the country's cybersecurity regulator. That removes one hurdle for businesses that list in the Asian financial hub instead of the U.S. Now, Beijing is actually overhauling the way it regulates IPOs as part of a broad campaign to tighten oversight of its big tech companies that control reams of valuable user data. Now, this also comes after Joe Biden said his administration will issue an advisory cautioning U.S. companies about the risks of doing business in Hong Kong.
The situation in Hong Kong is deteriorating, and the Chinese government is not keeping its commitment that it made how it would deal with Hong Kong.
Now let's get more on this with our chief Asia economics correspondent. He's Enda Curran in Hong Kong. So Enda, this seems like a different step from what the Chinese authorities are trying to do. Does it actually benefit companies, or would they still be, very wary of not listing in the U.S.?
Well, I think it does point towards more Chinese companies listing in Hong Kong, Francine, rather than going to the US. And as you mentioned, the backstory is that China's regulators are now cracking down in terms of adding more scrutiny on Chinese companies who want to list overseas, or setting the bar higher to grant permission for doing that. And of course, the backstory there is all about who controls sensitive data and the national security competition that's going on with the US, and of course the broader race for technological advancement that's happening between the world's two biggest economies. So there's a sense of China somewhat decoupling some of its sensitive tech sector from the US at the moment, telling those companies to come home. We've already reported some Chinese companies are already dropping plans to list in the US, and the implication then today of our own reporting from my colleagues is that Hong Kong could step up as one destination where that can happen.
So, and as far as I'm aware, in this new framework, actually any listing, be it in Hong Kong or the US, needs approval from the China Securities Regulatory Commission. I mean, what are the benefits for, you know, if you look at the benefits, of course, of listing in Hong Kong, it means that you kind of have the support of China, but you have less access to investors. So do you have less money if you list in Hong Kong, or actually at the margins it doesn't make that much of a difference for a company?
Well, there's no doubt that they still will need regulatory approval to list in Hong Kong, Francine. There's no doubt about it. That will still have to come from Beijing. I mean, on the flip side, Hong Kong is still one of the world's biggest financial centres, still a very deep liquid market. It certainly is undergoing a lot of political change. We know that there has been a very strict crackdown on the civil liberties side of things here, but foreign money is continuing to come in, so it is an option. It is an alternative for companies who do want to list in Hong Kong instead of listing in New York, for example. It's certainly a tool for raising capital. We see that continuously. I think Hong Kong's IPOs are on track for another very strong year this year. So because China has Hong Kong in its back pocket, it does allow it an option that when it is growing nervous about who controls its data, when its companies go overseas, that it does give it an option to say, wait a minute, instead of going overseas, let's bring you back closer to home. You can list in Shanghai. If you don't list in Shanghai, you can go to Hong Kong, which is wide open to global investors. So it is certainly a powerful asset for China to have, Francine.
And what are we expecting from Joe Biden today? So we're expecting him to say, or to discourage companies, U.S. companies, to do business in Hong Kong, but actually he won't order them to scale back investments or even leave the city, right?
Exactly, Francine. The sense seems to be that there won't be any specific detail in it about what investors need to do or about what companies need to do. So you could certainly play down the impact of the warning. But on the other hand, if you're to step back and just remember the context here, you would have to say, hang on, this is the US president issuing a warning, again, as I mentioned, about one of the world's biggest finance hubs. That's noteworthy in itself. I think it shows that Hong Kong remains on the agenda in Washington. The hawks in DC are watching very closely what's going on here in response to China's crackdown in Hong Kong over recent years. Now, of course, China refutes these charges from the US. They say it's internal affairs and the US should not be interfering. But today's expected announcement from President Biden, as I say, while not necessarily meant to greenlight any specific action by the sounds of it, it certainly is a reminder that Hong Kong remains a bit of a touch point for relations between the world's two biggest economies. And I think as a political issue, it hasn't really gone down hasn't slipped off the agenda, even though the protests here have dimmed in recent times.
Thank you so much. Our Chief Asia Economics Correspondent, Enda Kern, there, joining us from Hong Kong. Now, let's also talk about what's happening at the White House and what has happened at the White House between Joe Biden and Angela Merkel. This was one of our top stories yesterday, continues to be one of our top stories today, as the focus was not only on travel and whether Europeans can go back to the US, but also the focus was on Nord Stream 2, and they seem to have a united front when it comes to dealing with Russia on Nord Stream 2. Let's get straight to our reporter in Germany. She's Aggie Cantrell. And Aggie, thank you so much for joining us. First of all, when you look at what Angela Merkel, possibly her last trip to Washington, of course, before she steps down at Chancellor, did she, bring back the alliance between the US and Europe firmly back on the table?
I think it was made clear yesterday that while there is still obviously a bit of tension between the two parties when it comes to Nord Stream 2, that they were clear to show a united front between Germany and the US. Merkel was also asked about her previous relationships with other US presidents. Obviously, that was a question about Biden's predecessor, Donald Trump, but at the same time, she wasn't willing to take the bait on that, but wanted to push the fact that the transatlantic partnership between Germany and the US is still strong.
Aggie, I have to say that, we saw some pretty shocking images from Western Germany impacted by severe flooding, with many people also losing their lives. Have the events of the past few days put climate back on the top of people's concerns ahead of the election in September?
Yeah, I think it has to an extent, especially with the fact that that has been something that we've seen after the Greens got an original boost in the polls. They've now been floundering a bit. this state that has been particularly badly impacted is North Rhine-Westphalia, which is the state that is run by Armin Laschet, the CDU's chancellor candidate. And so he has made it clear that they need to be accelerating climate action, but it may be something that the Greens can use to pressure the CDU into greater commitments on climate change.
Aggie, thank you so much. Our reporter there in Berlin, Aggie Cantrell. Now, coming up, we'll have plenty more, of course, on inflation and the markets. The Fed chair, Jay Powell, faces lawmakers for a second day, describing America's recent surge in consumer prices as unique. So that was yesterday. Today, we'll discuss, of course, inflation and the dollar with Societe Generale's Kit Jukes. This is Bloomberg.
I've always sort of pictured what it was going to be like. I mean, you know, like the ride up there, the ride back. And I never realized that the whole experience was going to be so vivid.
But beyond sort of the satisfaction of your own goals being achieved, what does today symbolize for the company and also for all those children that were present earlier?
Well, look, for the children, we've just got to get building as many spaceships as we can, as fast as we can, so that one day those kids will have the chance to have the similar experience to what I had. And that we will do. We also launched this giant global raffle today, so that, you know, 2 kids for, you know, just $10 for a pair of tickets. If they could win the raffle, they can go up. But that money will hopefully enable many people to be able to go up who could never have dreamt of going to space.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, we have quite a lot going on well, inflation. The Fed chair, Jay Powell, is defending the central bank's stance to actually keep supporting the U.S. economy, even as inflation runs at uncomfortable levels.
This is a shock going through the system associated with reopening of the economy, and it's driven inflation well above 2%. And, you know, of course, we're not comfortable with that. This particular inflation is just unique in history. We don't have another example of the last time we reopened a $20 trillion economy. We're trying to both understand the base case and also the risks.
Meanwhile, both St. Louis Fed President James Bullard and Chicago Fed President Charles Evans spoke about beginning to taper.
I think we're in a situation where we can taper, and I think setting those parameters the right way. We don't want to jar markets or anything, but I think it is time to end these emergency measures.
If unemployment is at 4.5% at the end of the year and things are progressing the way that I'm expecting, I would guess that some adjustment would be in order somewhere in that time frame, probably. But it's going to depend on the data. That's the whole point.
Well, joining us now is Kit Jukes, Chief FX Strategist at Societe Generale. Kit, first of all, I'm going to ask you about, treasuries, about some of the divergence that we're seeing in bonds. But do the markets really now take their cue from dollar?
Do they take their cue from the dollar? I think markets. I think I mean, markets at the moment are trying to work out what to do with a Fed that is looking so far ahead into the future and talking about tapering, yes, but a rate hike that really isn't going to happen until the second half of next year at the absolute earliest, because they haven't started tapering yet, and doesn't know how to get its arms around that, in the sense that it was much easier to know that the New Zealand dollar would go up when it looks as if they're going to raise rates next month. We can get to grips with that. But yes, the U.S. story, so the Fed story that feeds the dollar, feeds treasuries, is by far the most important thing driving everything right now. And I said that the difficult piece of it, though, is that the monetary policy bit is we're talking about something that isn't going to happen for over a year.
But Kate, so is there anything that the market is mispricing? Like, 3 weeks ago, the markets were really worried about inflationary pressures. Now they seem to be cooler about it, but there are pockets, I guess, of the market that still have that at the forefront. So what kind of volatility do you expect in the messaging, right, to markets from the Fed? Or do markets kind of understand that this is a story, starting in at least October, to try and figure out how sticky this inflation is?
Yeah, look, I think the first thing about it is that I think the market needs to get its arms around is that when we talk about the inflation, it's a U.S. story. There isn't, yes, we're reopening economies, but there isn't inflation in Japan. There isn't inflation in the Eurozone. New Zealand, which is going to raise rates in August in all probability, has 3.3% inflation. That's 2% lower than the United States. These are orders of magnitude different. The U.S. has spectacular inflation, which may well be temporary, but it's due to really spectacular fiscal policies in terms of, you've reopened an economy with everybody having a check in the bank, roughly, and that getting spent. So the US is extreme, and I think that drives the volatility because the stakes are so high. Does this feed into wages? Is this going to last? But even then, if I've got bond yields so much lower, JGB yields so much lower, how do I drive treasury yields higher against that? So I think the volatility comes from this, this kind of air pocket that we're in before they do anything, while we sit and argue about the temporary or not nature of an inflation shock that is A, bigger than we thought, and B, not just unique historically, but unique geographically. It's an American problem, much more than anywhere else.
Right.
In the long run,
it's an American problem that could be exported to. It could be exported to the rest of the world, right? We spoke to the Italian central banker, and he says, the problem of America could become also our problem.
It could be, if they have to raise rates really aggressively, it could hit the global economy, and in a sense, that's why the market's not sure that they can raise rates that aggressively. I think it would be a good problem for Europe if what happened is that the Fed, moves towards raising rates earlier and more, and bond yields rise, and it looks as if any danger of Eurodollar, for example, going to 130 is gone, and the danger instead is that we'll be at 110 in 18 months' time or something like that. And I'm not sure that wouldn't be a positive for the European economy to get a little bit of imported inflation into the system on a more sustained basis. So, I think the key thing for Europe is that the global economy should be growing, that the global economy should be reopening. And what the Fed's doing at the moment, by being willing to look through the big temporary spike in inflation and not hike too soon, is give the global economy a chance to grow, which, frankly, is doing us a favor. I mean, the European Central Bank has history of preemptively snuffing out inflation and growth. So I'd be grateful to them for hanging on as long as we can get them to.
Okay. So what's your level, first of all, what's your favorite currency pair? And is there actually a cap on the dollar?
Yeah, I think my favorite currency pairs are the ones where I can see that there's room for rate rises. So I find the dollar difficult in the short term and easier in the long run, which is a hopeless thing to feel because of this gap. But I can see why the New Zealand dollar is reacting, because rate rises are coming into focus. I can see how that could happen for sterling, and that sterling could do better than the euro. I think I'm definitely migrating from dollar bear to dollar bull on a medium longer term view. So I'm going to like dollar sensitive currencies, and I want to really be bullish of the Canadian dollar. But you saw the reaction today that I think the market owns it a fair bit already. And finally, I would love to be more optimistic about emerging market currencies that are still worried about the pandemic. Because if we can have a patient Fed and a global economic recovery and get through this phase, the currencies that have had a hard time, like the South African rand, can bounce back pretty strongly in the months ahead.
All right, thank you so much, Kit Jukes, their Chief FX Strategist at Societe Generale. Now let's get straight to the Bloomberg First Word News. Here in London with me is Leanne Gerrans. Hi, Leanne.
Hi, Francine. Cuba's rulers say they will ease restrictions on food and medicine imports after mass protests over the weekend. The concession is designed to help alleviate the shortages that did stoke the unrest. Thousands of people took to the streets to demand freedom and food amid rolling blackouts and soaring inflation. The island saw its economy shrink 11% last year after the pandemic, the worst performance since the collapse of the Soviet Union. Jeff Bezos' space company Blue Origin has picked an 18-year-old for its first crewed mission to space. Oliver Damon will accompany Bezos and two others on the flight scheduled for July the 20th. The company says he'll be the youngest person ever in space. Oliver's ticket was paid for by his father, Jose, who is the CEO of Somerset Capital Partners. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, coming up, South Africa is pushed to the brink as police failed to contain rampant looting and arson. We'll have the very latest next. This is Bloomberg.
Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, we have quite a lot going on. We talk about inflation, we talk about markets. Of course, it's also a huge, huge day when it comes to earnings. So we'll have all of that in a second. Let's also talk about what's going on in South Africa. They're expected to face major food and fuel shortages following days of violent unrest across two key provinces. Rioters upend supply chains by looting supermarkets and torching good trucks, while more than 1,400 people have been arrested since violence erupted, and former President Jacob Zuma was jailed for contempt of court. Joining us live now from Port Shepstone, where riots have been taking place, is Thembile Sele. He is Bloomberg's government reporter in South Africa. Thembile, thank you so much for joining us. So talk us through exactly the situation right now.
Morning. So we have a relative calm today following days of unrest. Relative calm, I mean that overnight there's not been any fresh incidences, no burning buildings, no mass looting in terms of what we've seen over the past couple of days. President Cyril Ramaphosa has just arrived in one of the affected provinces, that is KwaZulu-Natal, and he's having a briefing now with the security cluster. The main concern at the moment is the priority of opening up the freeways, which have been blocked for over a week now, and that means that trucks that are supplying stores across the country have not been able to make those deliveries and replenish stocks in stores, and even in all the province as well, limited movement, meaning that the shops that have been looted have not been replenished.
So, Thembile, what has been the response from the South African government?
So they have been widely criticized by commentators for being slow off the mark. It seems that there was intel that was gathered beforehand about what they could expect in terms of these riots and any sort of orchestration behind the scenes. The security cluster ministers have actually been at odds in terms of the response that they took and when they acted and when they did not act. What they have done now is to deploy 25,000 soldiers. They are stationed in the two affected provinces, and the priority from the government side now is for those soldiers to watch over key national key points, infrastructure such as your ports, your airports, and your harbors. Business people also asking that the trucks that need to move across the provinces to replenish stores across the country be protected by those soldiers.
Thank you so much. We'll have plenty more from Thembile.
Silicon Valley.
This is the global center for high technology and innovation. What happens when big tech goes unchecked?
Too much power.
They are more powerful economically, socially, politically.
Is big tech going bad?
It's all about balance.
They're not bad because they're big.
I don't think big by itself is bad.
They're bad if they violate the law and if they hurt consumers.
Bloomberg Red Lines, U.S. and Big Tech. Friday on Bloomberg Television and Bloomberg Quick Take.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Jay Powell reiterates that the Fed is monitoring inflation risks, describing the current price surge as unique. We'll also hear from our interviews with Fed Presidents James Bullard and Charles Evans. President Biden warns about the risk of doing business in Hong Kong. Bloomberg sources, though, say China will exempt IPOs in the financial hub from cybersecurity reviews. And as billionaires raise their heads above the clouds, an 18-year-old is said to be the first paying customer to go into space. What's the next frontier for the orbital economy? Well, good morning, everyone. Happy Friday. I'm Francine Lacqua here in London, and welcome to Bloomberg Surveillance, the early edition. Now, there's quite a lot going on, of course, in markets, and our other top story, unrest, is spreading across South Africa following the jailing of former President Jacob Zuma. Now, rioters have disrupted supply chains by looting supermarkets and torching good trucks. South Africans are also expected to face major food and fuel shortages in the coming days and weeks. More than 1,400 people have been arrested since violence actually erupted. Well, let's talk about the unrest in the markets with our next exclusive guest. He's 91 Chief Executive Hendrik du Toit. Now founded in South Africa in 1991 as Investec Asset Management, 91 demerged from its parent company in 2012. The firm, which offers active strategies for clients around the world, now manages 139 billion pounds in assets. Hendrik du Toit, welcome to Bloomberg, and thank you so much for joining us. I can't believe I'm at home and you're in the studio. It's the world upside down. Hendrik, when you look at some of the horrible unrest that we've seen actually in South Africa, does it dent investor confidence in South Africa? Will it hurt revenue at 91?
Good morning, Francine. Of course it'll dent investor confidence. And of course it's a shock. And this was particularly bad because it was orchestrated. But it magnifies the social issues that that country faces and the challenges. So, of course, 91 itself obviously is a globally diversified firm. South Africa is part of that, but it will have no immediate impact on our business and what we do. As you can see, the markets have been fairly stable. Actually, the rand has been stronger this morning. Yeah. But I want to emphasize that it will dent business confidence and investment in South Africa, and that is not a good thing.
So, Hendrik, have you seen any investor appetite actually dim on the back of that?
Well, we operate in public, largely in public markets, and the markets have been acting orderly and clearing well. So there hasn't been any big shock. But of course, large capital projects will be put on hold. You have seen a few large firms call force majeure and stop projects, and that will have an impact down the line. And the sad thing is, these very people who have orchestrated most of this are the ones who have stolen many hundreds of billions, if not more than R1 trillion of assets looted from the state. And it's time they get prosecuted, and it's time order gets restored. And the good news is, of course, the community across the board, and my reports from colleagues and friends in South Africa is communities across the board are holding hands across the racial divide and establishing law and order. The state is the actor that has failed. It took far too long to get the security services on the streets.
Yeah, Hendrik, can I just go back to exactly what we're seeing in the markets today or this week? Because we can't quite understand. So if you look at, for example, the main stock exchange, the all shares hasn't been doing badly at all. But then we have reports that there's been some 4 billion, in rand of outflows on Tuesday alone. So how do you match up the two? Like foreign investors leaving, but share prices still quite high.
South Africa has a mature, deep capital market. It absorbs foreign participation and foreign withdrawals quite well. At this moment, there's a big search for yield around the world, which means emerging market assets are actually quite attractive, particularly debt assets. And therefore, what we don't see is a major collapse. And also, this is not a collapse of the system. Government's firmly in charge. This is not a political protest. This is thuggery. And thuggery is very different from a broad, genuine mass protest, which may lead to true long-term instability or governmental change. There's no doubt that there are problems, but they will be fixed. And that's what markets are telling us.
Hendrik, I also want to talk a little bit more about 91, and then we'll talk about the market in general. But why did you feel the need to oppose to the share swap of Prosus Naspers?
Actually, I'm in a very difficult position because I'm also the lead independent director of Naspers and Prosus. So some of our portfolio managers chose. They had the freedom because I recused myself from that decision. Some of them actually supported. So that's my personal belief is that the Prosus deal is a good deal for shareholders, or the Naspers Prosus deal, and it'll create a large and a much larger entity on the Amsterdam Stock Exchange, accessing a bigger capital market than the South Africans. Naspers was simply too large for the South African market in its previous form.
Hendrik, I also understand that you're raising some money, I think about, if I'm not wrong, 10 billion rand, which is about $690 million for a fund with ethos to help with the pandemic. Is it now more difficult because of the violence we saw in the streets this week?
We announced that last year in the depth of the pandemic on the assumption that the capital markets wouldn't recover, because there was obviously a risk, had policymakers not intervened as much in capital markets, that equity prices would be too low for companies to recapitalize, and therefore there would be a postponement of necessary investments. Clearly what happened post-March, April last year, markets recovered fast, and the need for a recovery fund of that nature was far less than before, and therefore we decided not to pursue with that in spite of the fact that we got substantial subscriptions, because the value was not there anymore. Last year, March, stock prices were right down at the bottom, and recapitalization processes would have been very different. The market took care of that.
Hendrik, I believe that actually your AUM's assets under management increased quite significantly in the last couple of quarters. What do you attribute that to, and what's the path forward?
I mean, basically, solid investment performance. We really went through the year-end. We have a March year-end of some of the best investment performance numbers I've seen in my 30 years with the firm. We held our nerve last year when markets were all over the place, and that obviously adds to the size of your book. General support from the market, and a good and competitive position for 91. So most asset managers today are in a fairly good position. We obviously must start preparing for tougher markets ahead, but we were happy that we came through the crisis quite well.
All right, we'll talk a little bit more about those tougher markets ahead. We'll be right back with Hendrik du Toit from 91. Also coming up, we'll have plenty more on ESG and the future of work. If you have any questions for Hendrik du Toit, just IB plus TV Go in the Bloomberg terminal. This is Bloomberg.
up to Maine and had a lobster. And it's not as romantic as Lisa going to Greece.
Tom Keene says what?
You mentioned Maine and the lobsters up in Maine. Well, they can't compare to what you can see in Greece. Even better, I can't pronounce it. Astracoma carinata.
I nailed it.
It's not thera, whatever. Astracoma.
You're nailing it.
Carinata.
You're nailing it.
We're figuring out the hard stuff for you on Bloomberg Surveillance. Mornings on Bloomberg Television and Radio. Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Put a price on carbon and put a premium on decarbonizing. That is, in fact, what we're doing.
We will make emission trading system applicable to aviation and extend it to the maritime.
We need real incentives for change. We also need to generate the revenues to seriously invest in that change. This, in a nutshell, is why we propose applying emissions trading to transport and heating fuels.
The design we have chosen will gradually bring CBAM into effect. And this will allow industrial sectors involved to have the time to adapt and to provide maximum certainty.
Climate transition will be accompanied by a social climate fund.
Nothing we have presented today is going to be easy. It's going to be bloody hard. But it's also something we need to do.
European leaders, they're speaking about their plans for the continent to cut emissions by 55% in the next decade, with total carbon neutrality by 2050. Now, 91 recently announced that it would also join the Net Zero Asset Managers Initiative, which supports investing aligned with the goal of net zero by 2050 or sooner. Well, we're back with Hendrik Dutoit from 91, who's still with us. Hendrik, I want to talk about ESG and sustainability in a second, but first of all, you were telling me that the market may have a bit of a wobble. I don't know whether we're repricing risk or whether something with inflation that will actually take everyone by surprise. But how volatile are you expecting the markets to be from here on end, or for the end of the year?
Francine, investment managers have good tools to justify, to look at long-term valuations. It's very difficult to guess the market in the near term. All I was suggesting to you is that we've had a fairly good run in markets since the bottom last year. And as you get closer to the eventual interest rate increase and fears of inflation rising, markets will become more vulnerable to shocks. Where those shocks come from will be very difficult to forecast. It might be a political shock, it might be something else. Last year we had a pandemic shock. But valuations are higher, and therefore one would go more towards quality assets that can robustly are resilient enough to survive more volatility. That's essentially our view looking ahead.
Hendrik, there's a pretty big differential between what bonds are seeing and what equities are seeing. I mean, do you at the end of the day have to construct portfolios to hedge both, or do you actually have to take a bet on one or the other?
A lot of what we do is in specific asset class buckets. We do we have a substantial multi-asset business where we look across asset classes, and clearly the equity market is telling us a better story. My view is the equity market is not incorrect in terms of what it's pricing, and we're going to see some very, very good results going forward. We may start to peak towards 2022. Interest rates are super low for artificial reasons, and I think the markets have already discounted that. As long as you're not exposed to super weak balance sheets, because super weak balance sheets will get hurt when interest rates adjust, and so will weak consumer markets, and that's what we must be watching out for. But that's some time off, as Jerome Powell told us.
Hendrik, let's also talk about ESG, because this was, the big push certainly here in Europe on Wednesday with the Commission, with those very, very strong targets that really changed the way we'll shop, travel, and everything in between. What does it mean for 91? So I know you're committed to this. What does it actually mean for your contributions, and how do you avoid greenwashing?
Firstly, congratulations to Frans Timmermans and his people at the Commission. They've worked really well. They've come up with a very, very coherent package and detailed package. The risk in that package, and that's not just for 91, is that we're going to have exactly the same response we had to COVID. A neat first world solution for the first world, ignoring the developing world or emerging markets, which are going to take longer and, by the way, emitted far less carbon ever over the centuries, and therefore should be entitled to a bigger allocation. And what we miss here is the package that deals with those who are outside the EU to continue to encourage them to develop. Otherwise, we're going to live in a bifurcated world where carbon will simply be transferred from the clean, rich West to the developing world. So that, I think, is the major risk here, which needs to be addressed, because we have to have a net zero for the world, not a net zero for part of the world. As far as 91 is concerned, clearly important that the companies we're invested in need to have proper transition plans, and the countries we're invested in. Otherwise, they will be punished by this kind of border tax, etc. That was mooted in the Fit for 55 plan.
So, Hendrik, how do you make sure that actually it happens like this? Does it have to be a kind of global standard that's mandatory for everyone to come out, which is near impossible, or is it incentives to actually developing markets to try and do the same as, for example, some of the European targets?
Francine, I want to go back to the Mark Carney point. It's about the transition. It's about the objective, which is net zero somewhere 2050 or around there. Then it's about the quality of the transition, not the quality of the near-term measurement, because what we must beware of doing is creating carbon-free portfolios. In other words, low reported carbon, and simply moving these off balance sheets of public companies into private hands, less scrupulous private hands, and actually those same assets continuing to emit and cause the same damage as they've done before. So the real point is whether it's not about having no coal in your portfolio, is whether the coal companies are publishing clear transition plans in order to stop producing coal by, say, 2030 or 2040, whenever the target is, and also clear transition plans for those communities who are dependent on those assets. It's not just the European people who live in Europe who are dependent, who are going to suffer from the transition. It's the people of Indonesia, South Africa, India, etc., who need to be taken into account here.
Hendrik, do you buy into the crypto craze, or is it actually a sign of something bad or trophy in the markets?
I think the technology behind crypto is extremely valuable, extremely innovative, extremely interesting. Putting your money into assets you cannot price and have no idea of pricing is not investment, and therefore it's not my gig, and I can't really talk about it. I do know there's a hell of a lot of liquidity driving lots of assets up. I'd rather buy a painting which I can't price and enjoy looking at it.
Okay, I mean, we'll have to get you back on to talk about paintings and NFT paintings, which is like the next frontier. I think Damien Hirst did one just on Wednesday. Hendrik, thank you so much for joining us for a great conversation. Hendrik du Toit, Chief Executive Officer there of 91. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. PIMCO must face a lawsuit filed by female workers alleging the money manager operates as a fraternity that favors white males. An Orange County, California judge rejects PIMCO's request to throw out claims in a lawsuit that allege the company's culture marginalizes women and favors men regardless of their qualifications. A PIMCO spokeswoman declined to immediately comment. Membership Collective Group, the company behind the trendy Soho House Members Club, found 9.6% in its trading debut after raising $420 million in an IPO priced at the bottom of a marketed range. The company, which has not turned a profit, lost $93 million in the 13 weeks ending April the 4th, compared with $45 million for the equivalent period a year ago. As of early April, the company was $820 $26 million in debt, which it plans to pay down using the IPO proceeds. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, coming up, the future of space is bigger than Bezos, Branson, or Musk. Yes, the orbital economy goes way beyond the dreams of billionaire spacemen. Up next, we discuss today's big take. This is Bloomberg. What does it change for your July 22nd meeting?
Well, we have a framework. We have a new framework that is unanimously approved by the Governing Council, and we're going to look at, as we always do every 6 weeks, we're going to look at the circumstances, we're going to look at what forward guidance we need to revisit. We're going to look at the calibration of all the tools we are using to make sure that it is aligned with our new strategy. And I think that, given the persistence that we need to demonstrate to deliver on our commitment, forward guidance will certainly be revisited.
Does it give you extra tools? So on July 22nd, it's actually a bit, it was always a big meeting, but it's an even bigger meeting because it's not only something technically, right? It's not technical change.
It's going to be an important meeting because, number one, we're going to communicate differently.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now to the space race. After decades of false starts, Earth's orbit and points beyond are already being commercialized at incredible speed by dozens of private companies. Think of Bezos, Branson, and Musk. But the billionaire joyrides into space are just the brightest, shiniest objects in a much larger field. What happens up above us will be one of the most important economic and technological stories of the next decade. Well, joining us now is Bloomberg intelligence analyst Matthew Bloxa. Matt, always great to have you, especially when we're talking about space. So let's start with Blue Origin's launch next week. How will it compare to Branson's flight last week?
Yeah, quite different. It's going to be much more like a traditional rocket launch rather than a kind of plane-based trajectory into space. But in terms of where it'll actually go to, quite similar. It will just go through the Kármán line, which is about 100 kilometers up in space, a bit higher than Branson's, but going to be up there for a similar amount of time, about 10 minutes maybe before it comes back down. But I think, crucially, you're probably not going to have quite the same marketing glitz that we saw with the Virgin launch last week, which is essentially a sales pitch to get more people to sign up. As Blue Origin next week's launch is a part of a much bigger plan to get to the moon and potentially even to Mars. So kind of grander ambitions from the Bezos camp.
Yeah, but Branson was definitely on Monday. I get all muddled because it's been a long week. How do these trips actually fit into the wider commercialization of space?
Yeah, I mean, it's easy just to kind of look and say, oh, this is just a bunch of billionaires playing around with things. But, all these guys are investing billions of dollars into research to make space a much more routine form of travel and to kind of open up, all sorts of opportunities in terms of, not just tourism, but exploration. And, I think we've seen over the last 5 or 6 decades that a lot of technology that we use every day of our lives, just in health, communications, everything has come from investment dollars going into space. So, I think it's easy to be glib, but, but there is a lot of spin-off benefits that come from all of this investment. And, ultimately, if Elon Musk is successful, the human race is going to become a multiplanetary species. Maybe we'll need that if climate change action isn't successful. But, it's obviously something for the next couple of centuries, I think.
Matt, thank you so much. Bloomberg intelligence analyst there, Matt Bloxham. And if you want to read today's big take about the future of space in full, and I think you should, it's a wonderful, wonderful take, just type NI Big Take, go on the Bloomberg terminal, or you can also find it on our website. Now, Bloomberg Surveillance Early Edition continues in the next hour. Danny Berger joins me out of London. Kaylee Lyons will be in New York. We'll, of course, talk about space. We'll talk about treasuries. We'll talk about inflation. This is the big question that we heard all week about, and we'll also talk about net zero emissions. This is Bloomberg.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Access the financial world on demand. Hear from leading economists, policymakers, and industry industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
You're really looking at quite a strong U.S. economy over the next couple of years.
I'm expecting that this year real GDP growth is going to be on the order of 7%. That's an extraordinary number.
The economy is strong, and that there's a lot of pent-up demand. People are anxious to travel and to enjoy things again.
This is Bloomberg Surveillance, early edition with Francine Lacqua, Matt Miller, and Keely Lines.
It's 10 a.m. in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Friday, July 16th. Our top stories today: airlines may soon be flying high. President Biden meets with Germany's Angela Merkel and hints at lifting that travel ban on flights from Europe. A warning for American business. The U.S. is on the verge of cautioning companies about doing business in Hong Kong. And the future of space, it's more than just the dreams of a few billionaire astronauts. I'm Danny Berger with Francine Lacqua in London and Kaylee Lines over in New York. Matt Miller is off today. And it's another day, another flatter yield curve, and another market session dominated by economic concerns yesterday. But today, Francine, over here in the real economy, I mean, a really solid start to earnings. I think I might be the only person in this world who hasn't bought a new Burberry bag or a Cartier bracelet.
I haven't either. Yeah, I haven't either. I've bought everything else, though. I mean, I feel like every day there's some kind of package, which, I mean, my husband also shops quite a lot for stuff we probably don't need. But no matter, this is, goes back to whether these earnings can be supported going forward, or it all has to do with the reopening. I mean, is there such a thing as a transitory, like, retail shopping? I guess that's what analysts are trying to find out today. But certainly we had some pretty stellar earnings from across the board. And Kaylee, that's also playing into markets in Asia and then filtering in Europe.
Yeah, in Asia, Francine, it was generally a weaker session. The one exception maybe was Hong Kong, although it just fractionally closed in positive territory. Of course, that is after news that Beijing will allow companies listing there to be exempt from rules and approval by the cybersecurity regulator, of course, trying to entice companies to list there instead of in the U.S. But you did have China and Japan down by about 1 percentage point. Of course, Japan, following that BOJ decision, no real policy changes except for moves on the climate front. And after that, JGBs were ticking higher by just a basis point on the 10-year. We're now sitting at just around about 2 basis points. And of course, in foreign exchange, one pair I wanted to note was the Kiwi, stronger against the U.S. dollar by about 0.6%. The big outperformer in the G10 space today after inflation came in above the central bank's target for the first time in 10 years. So that's leading traders to ramp up bets that policy rate hike could be coming as soon as next month. As for here in the U.S., of course, the losses yesterday were led by big tech. Today, though, futures are clinging to positive territory, including on NASDAQ futures, which are up about 4 points. And in the Treasury market, we have seen the 10-year bond yield fall about 12 basis points in just the last 2 days. Today, though, we're retracing some of that up about 3 basis points this morning to 1.33%. I also wanted to point to the 10-year real yield because, yes, it is ticking higher, but still around negative 103 basis points. It has come down about 28 basis points in just the last month. And finally, oil is trying to recover some ground here. WTI up about 0.5%. Still, though, on pace for its worst week since March, Danny.
Well, oil definitely helping UK markets out today, Kaylee, because as you know, we have the oil majors mostly listed there. UK stocks almost up by 0.5%, but elsewhere, you'll see a pretty positive picture in Europe. And it really is the earnings story that seems to be dominating their narrative right now. You have shops, they're open again, so consumers are doing well. Banks in the Nordics are posting really strong earnings. So most regions moving higher today. So on a headline index, we're up 0.2%. But the other very large theme carrying this index higher today today is travel and leisure, up 1.6%, the best performing sub-index in the stock 600. That's as Biden talking an presser yesterday after meeting with Angela Merkel, saying that we might have that travel bridge, the traveling open between Europe and the U.S. That's definitely giving a lift to stocks like BA parent IAG. Now, meanwhile, we have UK two-year yields ticking just ever so slightly lower, but they're actually trading around their highest level since April 2020. It's really this policy divergence we're seeing between the Fed and across the Atlantic at the BOE. You had two speakers yesterday sounding more hawkish. Now bets for a policy rise are at their highest since May 22. That's when we're going to see that hike coming from the BOE. Now, finally, I wanted to point out tin. It is listed in London, so Francine, I think it's fine. I use it in my European market check. Tin is at a record high. I know we're all bummed out that lumber gave up its year-to-date gains, but Francine, tin, it's all about tin.
Tin, I don't even know, do you use tin? I mean, I have, pots made of tin. Do you use it in some kind of like catalytic converter? We need Matt Miller, to see where tin exactly is used.
It is used in a lot of tech. I was actually thinking, like, where might Francine have tin in her house? And I can't imagine it's tin cans of soup. I'd assume House Lacqua only uses soup from scratch. I mean, I think that's a fair assumption.
Yeah. I mean, it's cheaper, and plus when you're Italian, they'd actually take my passport away. But I do have tins. Like, I actually have tins where you put, I don't know, your keys or something like that. I didn't know that, Danny. That's a fabulous fact. Yeah. Now, this is what else we're watching today. First of all, some important U.S. data coming out in the next few hours. We start with June retail sales at 8:30 a.m. Eastern time. A month-on-month drop in spending is expected. Then at 10 a.m. New York time, we'll also get the preliminary University of Michigan sentiment reading for July. The inflation expectations will be a key focus. And, of course, various earnings report to keep an eye on in the coming hours. We'll hear from State Street, Charles Schwab, and industrial manufacturing company Atlas Copco. So after that, we'll also look at what's exactly going on between the U.S. and Hong Kong. And Hong Kong tensions rise between the U.S. and China as President Biden issues a warning to U.S. companies doing business in the region.
The situation in Hong Kong is deteriorating, and the Chinese government is not keeping its commitment that it made how it would deal with Hong Kong.
Now, for more, let's get straight to Bloomberg's Enda Curran joining us from Hong Kong. So, Enda, what exactly we're expecting President Biden to say is, I guess, to try and deter U.S. companies from doing business in Hong Kong, but he won't actually say, look, you can't invest in Hong Kong and you have to pull out.
Yeah, we're not expecting specific details, Francine, but clearly it is a reminder that Hong Kong remains on the agenda of the Biden administration. They do remain concerned here about the ongoing crackdown. We've had a pretty strict crackdown on civil liberties with the national security law. The concern among the business and investment community now is, where does that go next? Does it target a flow of information? Does it target the legal system? And clearly these are concerns that the Biden administration is getting at. Now, China, of course, rejects these charges. They say it's their own internal affairs. As I say, we won't get specific measures. We don't expect specific measures from the Biden announcement today, but it is a sign that the U.S. administration is continuing to watch what's happening here.
Meanwhile, China seems to be wanting companies to be enticed to list in Hong Kong rather than the U.S. Walk us through what exactly these cybersecurity exemptions mean.
Exactly. It does seem like that's the idea here. Remember, the backdrop is that China is increasing oversight of any Chinese company that wants to list overseas. That's because they're worried about where the data will go, who controls that data. The backdrop to that is the national security concerns between China and the US, and of course the broader race for technological know-how as China tries to push its own economy ahead. So the net result is that China is clamping down. We already know that some Chinese companies are talking about skipping the US listing and bringing it back closer to home. And all the indications from our colleagues reporting today are that Hong Kong will perhaps be, it will still require approval from Beijing, perhaps some of less oversight than needed to go overseas. That might encourage more Chinese companies to list in Hong Kong. And that's clearly one takeaway from that news today.
Enda, thank you so much. That's Bloomberg's Enda Curran. Now let's stick in Washington, where President Biden hosted German Chancellor Angela Merkel at the White House on Thursday, hinting that the European travel ban might be coming to an end. For more, we're joined by Bloomberg's Aggie Cantrill. So, Aggie, is there now a timeline for reopening the other half of the travel corridor between the U.S. and the EU?
while there isn't a timeline per se, he did say that there was going to be an answer on this issue in the next several days. And what's interesting to see is that Merkel herself brought this issue up because it's something that the EU is expecting reciprocity from the US on this front, because US travelers can already come to the EU. And in this front, Merkel also said last night that she hopes that it's going to be a sustainable decision, that this isn't going to be something where, because of a rise in infections, they're going to have to backtrack a couple of days later. They're going to want, when this decision is made, that it's going to be made sustainably.
Aggie, they were pretty tough, actually, when it came to Nord Stream 2, right? This is the U.S. and Europe coming together and saying, you know, we won't tolerate Russia bullying any of their neighborhoods, basically. I mean, does this just mean that Europe and the U.S. are now back as strong allies?
I think there's still a bit of a distance on the question of whether Nord Stream 2 is a good idea in the first place. But the fact is when Biden came into office, this deal was already very much on its way to completion. It was 90% complete when he came into office. Now it's closer to 95%. And so it's now a question where they can see eye to eye, where Merkel and Biden can see eye to eye, is looking at how they can make sure that this project means they can still mitigate the influence of Russia within the region. And that means looking towards Ukraine and how they can support Ukraine's security and Ukraine's ongoing role as a gas transit country.
Aggie, thanks for staying on top of this story for us, and we'll continue to monitor any news coming out of the meeting. That's Bloomberg's Aggie Cantrill. And I'm going to go ahead and stick in Europe as well. Francine, I mentioned to you earlier about how strong earnings are looking. Well, one of the earnings in Europe that has been very strong are the Nordic banks, Swedbank, up 1.4%. A lot of commission coming from their various activities. Now, they have the advantage over their U.S. peers in that their client base generally is very, very wealthy. So they are taking out loans. They are putting money into asset management, and they are using their credit cards. So those earnings very strong. Now, let me look at the luxury earnings as well. As I say, everybody's buying a Burberry handbag. Everyone's buying a Cartier watch. But even that means that we're not having any gains. The reason we're seeing Richemont turn around, it was up as much as 2% when the stock market opened. The expectations here are so high. We knew these stores would open. We knew that people had money that they were sitting on. There's pent-up demand. So people just want to see even more than they are delivering. Sales gains in the triple digits for most regions in Richemont. Again, that was not enough to get this stock to move higher. It is the same story for Burberry as well. Really, really strong earnings, sales taking off, again, as stores are reopening, but these shares down 4%. The issue at stake here is last month, the CEO, Burberry, had announced that he was leaving to go work at Ferragamo. That uncertainty still hangs over Burberry like a cloud. They haven't announced anyone new. The search is still ongoing, despite the fact, Kaylee, that sales, especially among the youth, were really strong, even pointing to having Kendall Jenner in their ads for helping to generate this gain. So, you know, not even Kendall Jenner could save this stock from the high expectations it had.
That's pretty incredible. I thought the Kardashians and the Jenners were all powerful. Also, Danny, just putting it out there, my birthday is in 3 weeks, so if anyone wants to buy me a Burberry coat or a Cartier bracelet, I wouldn't complain.
Yeah, which one? Cartier or Burberry?
Just putting it out there into the universe. But I also want to check on some stocks moving here in the U.S. in pre-market trading, beginning with Moderna, because it is going to be joining the S&P 500 next Wednesday, July 21st, replacing Alexion Pharmaceuticals. And in anticipation of that, the stock is up about 8% in early hours. A stock plunging to the downside, though, elsewhere in biotech is FibroGen. And this is after an FDA advisory panel rejected its anemia treatment it had been working on with AstraZeneca. So it's down 34% before the bell. Finally, though, one stock moving to the upside, maybe a little bit of dip buying happening for a second day, is AMC. It had lost a quarter of its value in the first trading days of the week through Wednesday, then rose about 8% yesterday. Those gains continuing this morning. The stock up a little more than 5% before the bell, Francine.
Jack, buy the bracelets. I mean, I'm fascinated by the luxury store. Because where do people, you know, so you buy a Burberry bag, but where do you wear it to? And actually, you know who's cooler than, you know, the Jenners? It's definitely Billie Eilish, and I think they did also some kind of collaboration with them, Burberry, that is. Now, coming up on the program, we'll talk treasuries and, of course, the road to infinity, QE, infinity, and beyond. Al Jibri's portfolio manager, Alberto Gallo. Also, a little bit later, the UniCredit chief economist, Eric Nielsen, will be coming up, and we'll be speaking to the chief executive of the Johannesburg Stock Exchange, Leila Fourie. This is Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
You should never invest in something that can't be simplistically explained to you. The very, very good investment advisors can take complex matters and make them very simple.
A shock going through the system associated with reopening of the economy. This particular inflation is just unique in history.
I wouldn't be so concerned about an inflation pickup because there will be inflation pickup for sure. That is something that we regard as transitory.
It's a loaded word, transitory.
Withdraw some of the current monetary stimulus in order to return inflation to the 2% target on a sustained basis.
We must have a much more forceful and protracted or monetary policy stance that may even imply a moderate and temporary period of higher inflation above the target that we have.
The thing, this is very uncertain.
We need some optionality on the upside with respect to possible inflation shocks.
The view there from some of the key policymakers in what has been a heated week in the inflation debate. Now, quite a lot going on also filtering through in the markets and some of the divergence that we're seeing in bonds across the world. Joining us now is Alberto Gallo, Head of Macro Strategies and Portfolio Manager at Algebris. Alberto, as always, thank you so much for joining us. Is inflation actually only a U.S. problem right now?
Yes, we need to make a distinction between the United States and the rest of the world. The United States and the United Kingdom are in a much higher inflation environment. So initially, this is driven by supply constraints. These supply constraints are not as transitory as we might think. Things like onshoring of production because of geopolitical risk, for example, on chips, or, for example, lack of workers in certain sectors. These are things that are going to persist. But on top of that, in the US and the UK, you've got record high fiscal stimulus, and in the UK, you have also import-led inflation. So it's going to stay sticky in our view.
So if it's going to stay sticky, does that mean the Fed is on track for a policy mistake, Alberto?
The issue is how to manage tapering in an environment where financial markets have become very, very reliant on low interest rates. So today, the yield curve has
tightened a lot compared to a few months ago because essentially markets don't believe the Fed is going to be able to normalize policy in a credible way without a market accident. But at the same time, the more they wait, the longer they wait, the bigger the accident gets later on. So the reason here, the reason to normalize policy is not that inflation is going to be a runaway number. It's because you've got to do risk management because we don't have the emergency of last year. And so it's not a horrible idea to take off the foot from the accelerator a little bit compared to a year ago.
Okay. So if you see a potential accident coming and a potential big market reaction, when will that be? For example, on your calendar of risks, do you mark August 26th, the start of Jackson Hole, as a time to seriously prepare your portfolio for?
So we believe central bankers are going to attempt a lift off, so tapering discussions, probably coordinated after Jackson Hole, and this is going to happen, slowly between Jackson Hole and the end of the year. The real issue is markets are really complacent and really positioned in a way that, higher real interest rates aren't really going to be well received. Everyone is on the same side of the boat in the market. There has been some attempt to talk down certain bubbles like crypto or certain stocks by central banks. But valuations remain really high. We're at record tight spreads in the high yield market in an environment where you might actually start normalizing policy a bit. So everyone is on the same side of the boat. And it's likely that if they go too soft this year, then next year, as inflation remains sticky, they might have to slam a bit more on the brakes, and we might see a tantrum later on. So it is a catch-22 situation. But the reality is we can't fix the economy just with interest rates.
Alberto, right. I mean, as soon as, if there's an inflation problem, what kind of repricing could we see? I mean, could it be like actually a move that's so violent that it would force central banks to even act to contain it? So
imagine an attempt to normalize interest rates now, right? After the biggest fiscal stimulus in the history of the United States since World War II, like. If the Fed is not able to normalize now, then we are stuck in a liquidity trap forever. That is the reason why they at least need to try to gain some dry powder for when potentially another slowdown will hit in the future. So it is very important that they manage market expectations. And so far, in our view, they've been a little bit too dovish because they have essentially they've been afraid of small sell-offs in the market. At the same time, companies at low yields continue to build up leverage, which makes the economy more vulnerable.
All right, we have to leave it there, but thank you so much for your time today. Alberto Gallo, head of macro strategies and a portfolio manager at Algebris. This is Bloomberg.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Time now for the first word news, and in Germany, at least 80 people have died in the worst flooding in decades. Many more people are missing. Belgium and other parts of Western Europe have also been hit after several days of heavy rain forced rivers to overflow. In Cuba, the communist government is promising it will learn from the rare mass protest over the weekend when thousands of people took to the streets to demand freedom and food. Authorities will temporarily ease restrictions on food as well as medicine imports. And there may be an upside for Republican candidates criticized by former President Trump. 3 of them who have faced his wrath raised more money in the second quarter than their Trump-endorsed challengers. They include Senator Lisa Murkowski, Congressman Anthony Gonzalez of Ohio, and Katie Britt, who is running for Senate in Alabama. Coming up next, we will recap a week of hot inflation prints and testimony from the Fed Chairman Jerome Powell with Eric Nielsen, Unicredit chief economist. He joins us next on Surveillance Early Edition. Stay with us. This is Bloomberg.
Blast off. China's first manned mission in 5 years is on its way. 2 veteran astronauts and 1 newbie are making their way to Tierney Space Station, which means heavenly harmony. They're travelling in the Shenzhou 12 spaceship, launched by a Long Mark 2F Y-12 rocket.
我们一定服从命令，听从指挥，沉着冷静，精心操作，圆满完成神舟12号载人飞行任务。
The crew members will be staying at the station for 3 months. They'll be carrying out experiments, testing equipment, maintenance, and more.
2022年完成空间站的在轨建造，建成国家太空间之后，空间站将进入到应用与发展阶段。
Once completed, the space station will allow for stays of up to 6 months, just like the International Space Station. China has big ambitions for its space program. Last month, it landed a probe on Mars that carried a rover, the Zhurong. It sent 11 astronauts into space and 2 years ago sent the first spacecraft to land on the far side of the moon.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Danny Berger is with me. Kaylee Lyons is in New York. Now, it's all about the markets. Matt Miller, just a reminder, of course, is off this week. Now, it's all about the markets. But when you look at the markets, Kelly, so it's inflation, the fact that actually the economy seems to be ticking along nicely, although there is this always underlying concern about inflation. But earnings were pretty stellar. And I think now it depends on whether analysts think this is just a pure factor of the reopening or whether there's something more substantial and fundamentally good about what's coming up ahead in the next 3 to 4 quarters.
Yeah, that's absolutely right, Francine. It has really just been quite a week that Matt Miller has missed. I'm very glad it's Friday, and I'm going to miss you, Danny, but I am glad Matt's going to come back next week and actually be with me here in New York, so I'm looking forward to that. As for what the picture looks like and is shaping up to be on this Friday, we are higher in Europe after losing yesterday, although I would say the Stock 600 is off of session highs. Right now, it's only up about 0.1%. And here in the U.S., after big tech led the losses yesterday, futures are in positive territory and gaining a bit of ground at this point. S&P 500 futures right now up about 5 points. In the bond market, really interesting action over the last couple of days. In response to hot inflation prints, we've actually seen yields heading lower over the last 2 days. Today, though, creeping back up about 3 basis points on the 10-year to 1.33 or so percent. And finally, oil, after 2 days of losses, trying to gain back some ground, but a 0.7% or 0.6% gain today, not enough to recover from this week's losses, which do look set to be the worst in about 4 months. As for some stocks moving in pre-market trading, I want to note one new entrant that is coming to the S&P 500. It is Moderna, the COVID-19 vaccine maker. It will be added on July 21st, supplanting Alexion Pharmaceuticals. As a result, Moderna's up about 0.8%. We're not really seeing any changes yet in pre-market trading for Alexion. And finally, some dip buying coming into the OG meme stocks, the originals, GameStop and AMC. AMC, after losing 1/4 of its value in the first 3 days of the week, is up about 11% if you include today's pre-market gains of about 5% in the last 2 days. And then GameStop attempting to snap a 5-day losing streak. It's also up about 4% in early hours, Danny.
Diamond hands, Kaylee. Diamond hands. Stick with it. All right. Well, I'm looking at the macro picture, and this actually builds on something our last guest, Alberto Gallo from Algebrist, pointed out, and that's this divide between the U.S. and the U.K. Inflation might be a problem for both of them, but they're handling it differently. I also want to welcome in our radio listeners, and I have a chart in front of me, listeners, that I am going to explain to you. So I am looking at the premium of U.S. 10-year yields versus that of U.K. 10-year yields. And again, for those listening on radio, we've seen this steady decline in the premium, and it's now hit its lowest, going all the way back to February. This is, of course, because the BOE has had both Saunders and Ramsden, two policymakers, say that it might be time to take our foot off the accelerator, to start tapering back. Now the market is pricing in a rate hike come May 2020. Again, this is such a starkly different picture than what we're seeing play out in the U.S. market, bonds perpetually stuck at 1.3%. So it really is a story, Francine, of macro policy divergence. And that is so different than last year, when this time last year, the story was in entirety a global central bank pumping liquidity into the system, making things easier. It's a story of two different paths now.
Yeah, it certainly is. Now, joining us to talk about these two different paths, Eric Nielsen, Group Chief Economist at UniCredit. Eric, thank you so much for joining us. So next week, we're expecting a big meeting from the European Central Bank, July 22nd. How will they actually deal with the comments they heard and the inflation prints that they heard from the U.S.?
Very good question, Francine. Good to be here. I think we will get less on Thursday than most people think. We got the strategy review, which is very good in many ways, but it was missing the one critical element, how do we get to the inflation target? Then, of course, Lagarde had the interview with you, and they panned out a bit of a blitz to explain that they are serious, forceful, and persistent. But remember, the July meeting is not a meeting where they have new forecast. So I think what you get next week is a clearer statement. Certainly, they're working on this, they say, and they will probably try to finesse the forward guidance. But the forward guidance is just words, right? So I think we have to wait a little bit longer before we see what they actually will do.
So, Eric, when it comes to the Fed, in Jerome Powell's testimony on Capitol Hill this week, he was asked about the fact that inflation right now is above the Fed's target, and he said it's not moderately, this is significantly above it. But and while they're not comfortable right now, they do think it's going to be transitory. Does it get to a point where they are too uncomfortable and have to act?
That could happen, but I don't think it's going to happen. I mean, if you look at the U.S., I think you're looking at less than a handful, or maybe a handful of indicators: used cars, rental cars, airline prices. These are the ones that drives prices up. If you take that handful of indicators out, it's actually extremely well behaved, the inflation in America. And if you look at airline prices in America, I saw a great tweet from Constancio, the former vice president of the ECB, that showed that levels are not back at pre-pandemic levels even. And I think one of the Bloomberg, one of your colleagues had this great quote on used cars, that inflation only become a problem if it goes to wages, but who are making used cars, right? So I think the odds of this becoming more than temporary is very, very low.
I believe that was Tracy Alloway that said that. And I actually had to read that twice to think, who's making used cars? Oh, right, no one makes used cars. Eric, there is this argument, there's this argument that's been forming, though, that regardless of if it's just in some industries, even if it's just temporary, we are seeing inflation start to overshoot. And this is something Mohammed El-Arian says, that if the Fed doesn't react now, they risk waiting to react and needing to react more aggressively, thereby shortening the economic cycle. What do you make of that argument?
Well, first of all, I'm a big fan of Mohammed, so I'm very nervous to say that I disagree with him, but I do disagree with him, because there's also a price if you go too fast, too early, right? It's if all the forecasts of inflations are broadly right, that it is temporary, then the only risk you run is that somehow these temporary high numbers starts an inflation expectation process, and not only that it actually makes it possible for workers to claim higher wages, and then you start the whole process. In America, this is not zero probability. I think it's low. In Europe, it's extremely low. So if I were a central banker also in America, I would sit on my hands a little bit, but of course, watch it carefully.
But Eric, how long would you stay on your hands? Do you need to basically telegraph to the markets? What exactly is the central bank's biggest concern right now? Is that they have inflation where they need to act, or is that actually they don't communicate it to the market? I mean, for me, the market here seems like to play a crucial role that could really go against what central banks try to achieve.
Yeah, I don't really worry so much about this. I think what your earlier guest was on about the difference between America and Europe is the key issue. In America, you are basically having these high spikes. The overwhelming probability is that numbers will come down. Look at all the forecasts. So the communication there should be that that's what they expect. And if you're sitting here 6 months from now and it hasn't really started to come off and it has spread to more than 5 indices and more fundamental ones, wages starting to pick up. But again, remember, unemployment is still below the trend line, then they may have to do something. In Europe, the overwhelming issue is how do we get inflation to 2%?
Right.
This is the issue.
Very different stories on either side of the Atlantic. Thank you so much, Eric Nielsen. Wish we had more time with you. He is chief economist at UniCredit. And coming up, deadly riots gripping South Africa. We'll speak about the economic impact on the country with Leila Fourie. She is the Johannesburg Stock Exchange CEO. This is Bloomberg.
Silicon Valley.
This is the global center for high technology and innovation. What happens when big tech goes unchecked?
Too much power.
They are more powerful economically, socially, politically.
Is big tech going bad?
It's all about balance.
They're not bad because they're big.
I don't think big by itself is bad.
They're bad if they violate the law and if they hurt consumers.
Bloomberg Red Lines, U.S. and Big Tech. Friday on Bloomberg Television and Bloomberg Quick Take. The curtain will rise again.
Broadway's returning June.
Have you bought tickets?
It's busted out.
You've got more time here.
Commodities are up.
Keep going.
To the moon.
Beautiful.
Bloomberg Surveillance, weekday mornings on Bloomberg Television and Radio.
Domestically led in terms of recovery, and in time, international investors will come back. But the country has been damaged, and the government has to show a level of urgency in stabilizing the country.
That was the Investec CEO addressing the situation in South Africa. Of course, South Africa has been gripped by deadly protests for over a week now, scarring an already weakened economy. The riots started in the wake of former President Jacob Zuma's imprisonment on contempt of court charges. The official death toll stands at 117 as of last night, and more soldiers are now being deployed to the streets as some areas face food and medicine shortages. Joining us now to discuss the economic and market impact of this is Leila Fourie. She is CEO of the Johannesburg Stock Exchange. Leila, thank you so much for your time. Do you expect that this situation will dampen foreign investment into South African assets?
Kelly, hi. I think it's important to take account of the country's process over the past year or so. This has been a week of intense and very extreme and emotive imagery. However, before the unrest began, SA was fast becoming a star performer in emerging markets, and the rally was very much underpinned by exports rebounding, and that has continued through the past week. The export boom has turned a long-standing balance of payments deficit into a surplus, and we were set to grow more than 4% in 2021. So the bounce back will certainly take a hit, but it needs to be taken in the context of a number of very important reforms that preceded the civil unrest. Semi-privatization of SAA, the reform on corruption was also an important aspect.
Leila, I'm so sorry to interrupt, but what we're trying to figure out is that actually we've seen some pretty big outflows, around, I think, $610 million in terms of outflows coming from investors, right, foreign investors coming out of South Africa. But at the same time, if you look at the JSE, stock levels have been holding up pretty big. So are you making up for foreign investors getting out with domestic investors, or how do the two, how are the two playing up?
The markets have functioned extremely well, and there is a bit of a paradox in the South African capital markets, whereby South African financial markets are separated from what's happening on the ground. So although we've seen massive outflows in the equity market, we have seen inflows in the bond market year to date in excess of 15 billion rand. And we've also seen a massive take-up by the local community. We have exchange controls in place, and the local buy side or the pension fund managers tend to take up the slack when you see foreign investors exiting.
How about the Johannesburg Stock Exchange itself, Leila? Have there been any interruptions in terms of employees' ability to get to work, to do their job, anything like that, or has that been running smoothly?
The markets have functioned very well, and there have been no risks to the financial stability. We have been working from home for a year and a half now. We have seen enormous volatility over a couple of days, and we've seen some single stock and some sectors being quite heavily hit. But the resilience of the markets continues, and we've seen no blowouts in the government bonds. The all share is still up 2% since the start of the month, and we're up almost 14% year to date. So the markets, as well as the infrastructure, are demonstrating the usual resilience that South Africa tends to demonstrate. South Africa operates very well in a crisis and is responsive and generally bounces back relatively quickly.
But we have seen an outflow, right, from foreign investors. And Leila, are you expecting that to stabilize, or are you expecting that actually to get worse in the weeks and months to come?
We've certainly seen an outflow, and the rand was, which tends to correlate with the outflow. The rand has ironically not been as badly affected. It was down by 2%, but it's trading at around 14.34 at the moment to the dollar, and that as compared to the 19 rand to the dollar a year ago at the same time. So these things all work, and there's a confluence of events. If we look at the outflows in the equity market, at the end of May, those were sitting at around 16 billion as compared to the prior year, which was sitting at around 43 billion. So while we are seeing outflows, those outflows are much less negative. In the bond market, we see the converse, a 38 billion inflow.
Right, so if that's some of the capital markets, I'm wondering about things you mentioned, specific sectors like infrastructure, for example, the ports, which haven't been fully up and running. Is there an expectation of how long that will take to get back to full speed?
Look, in terms of specific sectors, the sectors that are most affected are the consumer-facing sectors. There has been tremendous civil support in cleaning up and supporting some of the retail environments. It's difficult and unpredictable to say how long the tail will be, but certainly we've seen a very strong presence, and so we expect that the unrest will contract quite dramatically in the next couple of days, and has already, and the ability to bounce back and resolve some of the infrastructure damage will also be strongly supported by a public-private sector partnership, and there is also very strong financial support from Sasria, which is a state-owned entity for reinsurance.
Right. Leila, thank you so much. Unfortunately, we're out of time. Leila Fourie, CEO at Johannesburg Stock Exchange. Thank you so much. Just want to bring you some breaking lines crossing the terminal. Singapore will reintroduce some restrictions amid a karaoke cluster, what they're calling the karaoke cluster of an outbreak. This is, of course, a pretty severe setback, given that just days ago, Singapore had relaxed some of the social distancing measures, some of the nightlife venue measures, but now hundreds of nightlife venues are going to temporarily close. Some of the other measures they will also enforce are restricting the number of mask-off people in highly intense activity classes in size. So that's kind of working out in that sort of stuff. So we'll keep an eye on that for you. Up next, we're going to talk a little bit about space as well. Plenty more on these markets too. This is Bloomberg.
up to Maine and had a lobster, and it's not as romantic as Lisa going to Greece.
Tom Keene says what?
You mentioned Maine and the lobsters up in Maine. Well, they can't compare to what you can see in Greece. Even better, I can't pronounce it. Astracoma carinata.
I nailed it.
It's not thera, whatever. Astracoma.
You're nailing it.
Carinata.
You're nailing it.
We're figuring out the hard stuff for you on Bloomberg Surveillance. Mornings on Bloomberg Television and Radio.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix with Danny Berger in London. Kaylee Lines is in New York. Matt Miller is off this week. Now let's focus, of course, on what's coming up. The Federal Trade Commissioner Chair Linda Kan is poised to scrutinize U.S. technology giants like never before, as she's already an outspoken critic of the power they wield. Well, Bloomberg's Emily Chang has this report.
At just 32 years old, Lina Khan took the helm of the FTC, setting the stage for a showdown between Washington and Silicon Valley. Khan is one of the most outspoken critics of big tech, which she says has gotten too big and should face tough questions about its power and impact on democracy. Before the FTC, she served as a Columbia Law Antitrust Associate Professor and an advisor to the House Judiciary Subcommittee taking on antitrust issues. Khan is perhaps best known for her award-winning article titled Amazon's Antitrust Paradox, calling for greater scrutiny on the e-commerce giant. All eyes are now on how she puts reviews of big tech's so-called monopolistic practices to work. Emily Chang, Bloomberg, San Francisco.
Well, for more, tune into Bloomberg's special report, Red Lines, U.S. and Big Tech, first airing on Friday night in the U.S. and Saturday across Europe and Asia. Now, after decades of false starts, Earth's orbit and points are beyond already being commercialized at incredible speed by dozens of private companies. Think of Bezos, Branson, and Musk. But the billionaire joyrides into space are just the brightest, shiniest objects in a much larger field. Now, what happens up above us will be one of the most important economic and technological stories of the next decade. So let's get more on this with our Bloomberg intelligence analyst, Matt Bloxman. Matt, first of all, it's also the big take, which is a wonderful, wonderful take on the space race, the new space race. So let's start with Blue Origin's launch next week. How did it compare, or how will it compare to Branson's flight this week?
Yeah, hi. So, that launched on Tuesday. I mean, it's going to be much more like a traditional rocket launch, a pod taking 4 people up on a rocket, quite similar to Branson's airplane-based launch, but it will go to a similar kind of altitude, a little bit higher, about 100 kilometers just through the Kármán line, which is the internationally recognized kind of line that separates the atmosphere from space. But they'll be up there for about 10 minutes, experience some weightlessness before they come back down. But Blue Origin has much kind of grander ambitions. It's not just about space tourism. This is part of a much bigger initiative to take people to the moon and beyond. Kind of part of a bigger picture.
Yeah, I mean, look, we were talking about earlier in the show how Kaylee wants a Burberry bag or Cartier bracelet. I just want to put out there that for my birthday, I would like a seat on one of these shuttles and go into space. But I mean, with that in mind, like, will we get to a point where someone like me is able to go out into space? What does the wider commercialization of outer space look like at this moment?
Yeah, I think so. Yeah, certainly the ambition of people like Virgin Galactic and to some extent even things like Blue Origin to kind of bring the cost down so it's accessible for a much wider subset of the population. But you think of all the other industries that could spawn you have to go through a certain amount of physical and mental training to go to space. Then maybe that's a different angle to the fitness industry, for example. But beyond that, there's just so many satellites going up and they're being enabled by these developments that are making rocket launch cheaper and more cost-effective. Satellites are now the size of shoeboxes. Yeah.
I mean, cheaper, what is cheaper? Cheaper, I'm crowdfunding for Danny Berger. I mean, cheaper is still, what, 20 million? Or will it go down to a couple of my price range?
I think ultimately that they're thinking, I've seen Virgin talk about maybe, kind of in the low tens of thousands of dollars. So it's still expensive, still out of reach for most people. But, $40,000 compared to $250,000, $300,000 is a significant difference. And one of the seats on the Blue Origin flight next week went for $28 million, and whoever that is rescheduled for another day because they've got a diary clash, which is quite incredible when you can spend that much money and then push it out.
I love that, Matt. We were trying to figure out why. I mean, the newsroom has decided that the only acceptable reason for the diary clash is that if you're getting married. Bloomberg intelligence analyst there, Matt Blockson, may be trying to figure out exactly what that diary clash was. Now, this is what else we're watching for the rest of the day. And Danny, I know you're looking at, I guess, data.
Yeah, exactly. U.S. retail sales are out later today. The trend we want to confirm is that people are spending less on goods, more on services. So it's going to be really important, that data, Francine.
Yeah, and that goes back to, I guess, how the recovery is taking shape with the economy. What I'm looking at is, of course, President Joe Biden talking about U.S. companies doing work in Hong Kong. Now, we're not expecting to say that they need to pull out or actually stop doing it, but there's a warning about U.S. companies doing some business in Hong Kong. So we'll be all over that as well. This is Bloomberg.
Happening in the business world right now is how to get workers back to work and what benefits to give your employees. Microsoft is asking employees to be back in the office 51% of the time, but you're flexible about the rest of the time. Is that a permanent policy? And for those companies that are saying you have to be back in the office 100% of the time, are they on the wrong side of history?
I think we at Microsoft, we want to be much more data-driven. I also think that in time, if a year from now, we will have more sense of what the real structural change and needs and the expectations of both our employees and our customers are. And we'll really think about long-term policies based on, quite frankly, having all of that data behind us, because otherwise I think we are trying to come up and being too overly dogmatic when I think we need to be more experimental in our approach to return to work, because I do fundamentally believe the world's changed.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
The key questions is really, are stocks in a bubble? I don't think stocks are in a bubble, but they are expensive.
Some of the strength in the consumer that we're seeing in the credit card spending data, that's going to start to shift to the business sector.
Consumers are understanding, apparently, that what happens this year is not what we should expect next year.
It's pretty clear that whether it be the September meeting, whether it be Jackson Hole, the Fed is going to have to frontally address the tapering need.
We don't want to jar markets or anything, but I think it is time to end these emergency measures.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
just one more day from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio. Alongside Lisa Rabbits, I'm Jonathan Ferro. Tom Keane taking a long weekend. Joining us, Kaylee Lyons. Good Friday morning. Equity futures 43.58 on the S&P 500, advancing about 7 points. More data, Lisa. Retail sales just around the corner.
The idea here is we actually are expecting a decline as you see that ongoing rotation from goods to services, with services perhaps the biggest wild card. How much are they picking up with the Delta variant, keeping people home more than people previously expected, John?
And we start this morning like we've started every single morning over the last couple of weeks. What are we doing down here at 132.38 on 10s?
I think that is the question that nobody really has a good answer for. Is it a Fed mistake? Is it stagflation? Is it this feeling that we're going back to a low growth environment? You know, the answer to that is really unclear. And frankly, I'm not sure what data points we're going to get that will actually give us any answers before maybe, I don't know, 5 years from now, John?
We need to talk a little bit about COVID too, don't we? You, me, Tom, we've been talking all week about the Delta variant and two things. How would policymakers respond? How would consumers respond? And Kaylee Lyons, we're getting a taste now for the policy response, not just in Singapore, but also in LA County in the last 24 hours.
Going back to indoor masks inside, John, even if you're vaccinated, and my question is, does the science say that that is actually necessary? And of course, I also, as it relates to COVID policy, am watching travel this morning, John, because the Biden administration says that it is expecting in the next few days to have a decision on the travel corridor opening up the other way, Europeans being able to come back to the U.S. It was just on Sunday, Lisa and I, on the same flight from Greece, landed here in New York. We had no problem because we're Americans.
You went out together and you returned together.
We did.
It was great. We held hands the whole time. It was fabulous.
I can talk more about that later if you want.
Can I just note one thing?
Please do.
So the Delta airline is having an issue with the Delta variant because it is an unfortunate name for them. So they just call it the variant now, Tom, John.
They call it the variant.
They call it the variant.
Are you going to call me Tom?
I'm going to call you Tom because it's Friday and that's the kind of day it is.
And you've just forgotten each other's names. Okay, 43.58 on the S&P. Let me whip through the price action for you and get you set up for Friday. Keep saying it, one day, one more day. We're almost there. Equity futures up 7. We advanced a little more than 1/10 of 1%. In the FX market, euro doing okay, 118 on euro dollar, positive 0.05%. And there's the move in the bond market. Yields higher on the session, but down on the week. Yields are higher by a couple of basis points, Lisa, to 132.38.
All right, coming up, we are going to be getting those retail sales at 8:30 a.m. We're expecting a decline. No drama, negative 0.3% decline. The expectation here is to see that ongoing rotation from buying stuff to buying experiences, services. I do wonder, though, to your point, John, to your point, Kaylee, about the Delta variant, how much that has unexpectedly suppressed some of the activity that we've seen in services. I also want to see if we have any clues as to why deposits have increased so much at the big banks, why people perhaps are not spending more. Then at 10 a.m., this may arguably be the data point of the day. We get U.S. May business inventories, but that's not the data point. We get July University of Michigan sentiment data. The expectation here for what consumers think about inflation going forward, it could potentially determine their behavior. And Fed Chair Jay Powell indicated that this actually was what he may be watching more than anything. What do consumers expect and how are they changing some of their behavior? And John, to your question earlier, why are Treasury yields so low? Will we get some answers in the May Treasury International capital flows, the tick flows that come out at 4 p.m.? These give you some indication of the foreign buying that we see in the Treasury market. A lot of people have been blaming this, frankly, for what we have seen with respect to yields going so low, because this is a high yield when it looks to Japan or looks to Germany, some of the European countries. How much has that really been the reason behind the Treasury yield move?
You're making a bold call this morning, though. You don't think retail sales, that data point, is the data point of this morning?
I'm wondering how messy it's going to be given the rotation.
Okay.
I don't understand what exactly we can glean in terms of long-term trends. The thing that people are watching is the idea that perhaps the roll-off of some of the checks that people received, the stimulus checks in March, could lead to also a decline in spending. If that declines more rapidly than expected, that could give some indication of slack in the labor market as well. I'm not saying it's not important. However, Fed Chair Jay Powell really pinpointing consumer inflation expectations as being a real key driver of their view on price rises. And frankly, that has underpinned all of the price action in markets, John.
Lisa, well said. Looking forward to the data a little bit later this morning. We start with retail sales at 8:30 Eastern. We need to start this morning with the airline names. The airline stocks pre-market shaping up as follows. Since the highs of March on the airlines. We're down by almost 20% on S&P 500 airlines. For the individual names, this is the setup this morning. Delta, positive 0.6. United, up by about 1.55. And American, up by 0.49%. And Kaylee, the conversation, perhaps these names get some good news in, quote, several days.
Yeah, several days, John. It's still a wait-and-see mode when it comes to the Biden administration. I would note that we are seeing a bigger move on the European airlines. AIG, for example, is up more than 3% in the European session at this point because we know on the continent trying to return this way to the North Atlantic, they have been waiting for this for a very, very long time, John.
Lisa, the president's quote alongside Chancellor Merkel, "I'm waiting to hear from our folks in our COVID team as to when that should be done," relating to a question about ending the travel ban.
I'm very confused. All I can say is when I was going through passport control, there was a lot of yelling, a lot of confusion, people checking all of their news flows to figure out what the COVID restrictions really are and, frankly, where the pandemic even is.
Yeah.
John, what science are they looking at? What are they waiting to see? This is a great unknown that a lot of people are asking.
Well, hopefully they'll tell us in, quote, several days. Margie Patel joins us now, Wells Fargo Asset Management Senior Portfolio Manager. Margie, I'll start with a question I started this morning with Lisa. Your 10-year yield, 132.38. Why are we down here?
Well, I think we're down here because the Treasury curve is really, I think, kept suppressed by what the Fed is doing. They've anchored short rates low. They've been really buying a lot of the longer duration Treasury bonds long term. And so really there's no place for the demand for Treasury securities to go except the middle part. So you see a lot of expressing of emotion in the middle part. I think it shows people are worried about inflation, yes, but they're also worried about what if the economy slows down from deceleration or from COVID. Also, it is high, as you pointed out, compared to yields in the rest of the world. The dollar stabilized. So really, a 10-year at 130 plus or minus looks like a pretty decent investment.
So, Margie, based on your view that this perhaps is driven by what the Federal Reserve is doing, based on the fact that you could see foreign buying, do you count on yields remaining around here for the foreseeable future when you decide, you know what, equities still look like a buy?
Yes, number one, because Chairman Powell has told us so. He thinks inflation is transitory. He wants to lengthen out that period where we look at even reducing the amount of purchases they're doing with treasuries and mortgages. So I believe what he says, they have the power to do that. And I think he's holding his breath when he thinks about what if we very slightly taper and we see some explosion in the marketplace. So I think they don't want to see that. They're going to keep on this course. What they think about inflation coming down is more important than what the market thinks. And also their other goal of employment. They still claim that there's a lot of slack in the labor market. So that gives them a lot of pace, even if inflation isn't really doing what they'd like it to do.
How important have earnings season been this year?
Well, I think they've shown what people expected, are very, very strong in the first quarter. And I think we may once again be surprised in the second quarter to see earnings being much stronger than maybe we might have thought. We might have looked for a little bit of margin pressure. And my feeling is we're going to see companies continue to operate with less. Their sales are going up. They maintain their labor force costs either through productivity or just not hiring. So I think we may have another very pleasant surprise in the second quarter as we start to roll that out.
Not just over the course of this earnings season, but really since last earnings season, mid-March, we have seen the Russell 2000 down about 7% from its peak. And over the same time, the NASDAQ 100 is up about 13% over that time. What do you want to do with small caps now?
Well, I think that's a theme you see also in NASDAQ, those very, very large, you might say, high-growing safety kind of stocks, the FANG named, have so far outpaced the rest of the market. A good example was the airlines, which you cited. And I think that's typical. Lots of stocks, small cap or even some larger, are really down from their peak in March by 10, 15, maybe even 20%. And I think that shows that mixture is people want to be in the market, but they want something safe, so they keep sticking with the FANGs. The FANGs keep going up, and the rest of the market seems to be churning around, small cap, mid cap, or even large cap.
Margie, just quickly, and finally, you and I have had a chat about this in the past. Just how much cyclicality is left in this credit market? Does the cycle matter any more to what's going on?
No, I don't think we have a cycle anymore. I think the Fed determines that we're on a, you might say, a secular path of low growth around a very, very low range of yields.
What a call. Margie, we've got to follow up on that another time. You know I'm fascinated by this call of yours. Margie Patel of Wells Fargo Asset Management, Senior Portfolio Manager. Lisa, we no longer have a cycle. in the credit market. The Fed controls everything. The message from Margaret Vitale over at Wells Fargo.
I buy the argument. I have to just say that.
Well, I didn't think you'd be a seller of it, that's for sure.
Well, I think that there's an idea here, especially as we see a record number of upgrades relative to downgrades by the credit rating companies over the past couple of months, that basically the Federal Reserve saved companies that otherwise would have gone bankrupt. I mean, just the fact that they borrowed trillions of dollars of debt, and now they look so much better, even with the extra debt on their books, simply because borrowing costs are so low. Why are they so low, John? Because of the Federal Reserve. I mean, it becomes almost a tautology.
So, Katie, weigh in. Are we saying the data and the earnings no longer matters to this credit market? Is that the message coming from the likes of Margaret Vitale of Wells?
Has it mattered for some time, John? I mean, granted, spreads have widened out in July, but we're still at 282 basis points when it comes to high yield spreads over treasuries. And that the story, when you look at a one-year chart, John, is really quite remarkable. So I'm not sure anything fundamental has mattered that much to the credit market other than the Fed for probably over a year now.
This is the trouble that people have in this credit market, Lisa. I think it was JP Morgan that said it a couple of weeks back. Yes, spreads are super tight, valuations are rich, but I'm not sure what would take them wider. What would take spreads wider from here if the Fed's still in the game?
And the concern about this, just to build on that, Delta yesterday announced that they were going to buy back $1 billion of pandemic-era bonds. This just shows they're taking their cash and they're putting it into that rather than investing in the future. What is the consequence of that overall for the economy,
We'll
John?
talk about this credit market with Robert Tipp of PG, and we'll do that at 8 a.m. Eastern Time, the chief investment strategist, just before, 30 minutes before, we get retail sales in America. Here's the setup this Friday. Equity futures 43.56, up 0.1%. For our audience worldwide, this is Bloomberg.
With the First Word News, I'm Rishka Gupta. President Biden and China's Xi Jinping will address APEC leaders at a virtual summit on the pandemic today. APEC has 21 members, including the US, China, Japan, Australia, and Canada. While the coronavirus is a topic, the meeting is bound to reflect rising tensions between the US and China over a variety of issues. For the second day in a row, Federal Reserve Chair Jerome Powell defended the central bank's stance in front of lawmakers concerned about, well, inflation. Powell told the Senate Banking Committee that the reopening of the economy has driven inflation well above 2%. He reiterated the Fed's forecast that the high inflation will be temporary. And President Biden says the administration will warn U.S. companies about the risks of doing business in Hong Kong. He said the situation there is deteriorating and the Chinese government has not kept the commitment it made to the city. The advisory will warn companies about Hong Kong's new national security law, which prohibits anything construed as subverting the authority of the government. In Germany, at least 81 people have died in the worst flooding in decades. Many more people are missing. Belgium and other parts of Western Europe have also been hit. Several days of heavy rain forced rivers to overflow. People climbed onto rooftops and into trees after their houses were inundated or collapsed. China's Xiaomi has surpassed Apple to become the world's second biggest smartphone maker. That's according to preliminary estimates. Canalys, the research firm, says Xiaomi increased its shipments by 83% over the past quarter. Samsung had a 19% market share in the second quarter, followed by Xiaomi at 17% and Apple at 14%. I'm Rishka Gupta. This is Bloomberg.
Sem se apresentar, as escolas estão começando a reabrir, os teatros não vão reabrir tão cedo. Aí a gente teve a ideia, no melhor estilo Minuto Nascimento, vamos levar a música aonde o povo está.
minha missão hoje é fazer as pessoas sorrirem, cara. Sorrirem, olharem da janela, verem uma coisa inusitada, ficarem felizes, mandarem pros amigos e, enfim, curtirem um momento diferente, mesmo dentro de casa.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I've always sort of pictured what it was going to be like. I mean, you know, like the ride up there, the ride back. And I never realized that the whole experience was going to be so vivid.
But beyond sort of the satisfaction of your own goals being achieved, what does today symbolize for the company and also for all those children that were present earlier?
Well, look, for the children, we've just got to get building as many spaceships as we can, as fast as we can, so that one day those kids will have the chance to have a similar experience to what I had. And that we will do. We also launched this giant global raffle today, so that, you know, 2 kids for, you know, just $10 for a pair of tickets. If they could win the raffle, they can go up. But that money will hopefully enable many, many people to be able to go up who could never have dreamt of going to space.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
You should never invest in something that can't be simplistically explained to you. The very, very good investment advisors can take complex matters and make them very simple.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
This is a shock going through the system associated with reopening of the economy, and it's driven inflation well above 2%. And, you know, of course, we're not comfortable with that. This particular inflation is just unique in history. We don't have another example of the last time we reopened a $20 trillion economy. We're trying to both understand the base case and also the risks.
Good news for Chairman Powell, and maybe for you too. The 2-day testimony is done. There's nothing from the chairman today. I know a lot of you, including the chairman himself, perhaps find it a bit tedious, but that is it. 2 days of testimony from the chairman behind us now. From New York City this morning, good morning. Alongside Lisa Abramowitz, I'm Jonathan Ferro. Tom Keene out of the building. Katie Lyons helping us this morning. From the early surveillance edition to Bloomberg surveillance for the next couple of hours. Equity futures 43.53 on the S&P 500, advancing 1 single point and coming into Friday down about 0.2%. Big focus on the bond market. Yields coming up 2 basis points on a 10-year, down on the week, up on the session, just a little bit to 132.21 on 10s. The news out of Washington, D.C., we understood from the FT earlier this week we would have this advisory coming from the administration on the risk of doing business in Hong Kong. The president confirming yesterday in a news conference with Chancellor Merkel that would be coming. Reuters alluding to that this morning, Lisa, suggesting that that advisory is out today for U.S. business.
A lot of uncertainty still about how much this will have teeth. In other words, how much will the U.S. administration truly go after companies for acting in ways that they are uncomfortable with in Hong Kong? And frankly, we're not hearing from businesses a great deal of concern just yet, John.
To use the president's words, Kayleigh, it is more of an advisory as to what may happen in Hong Kong. It's as simple as that, and as complicated as that as well.
Yeah, maybe just putting it in words, John. We aren't expecting the U.S. Biden administration to say companies need to pull out of Hong Kong, that they need to pull back their investments in Hong Kong. I guess just be aware of the situation in Hong Kong, and the Biden administration is going to tell you more about that.
Let's head down to Washington, D.C. to get some clarity. Anne-Marie Hordern, our Washington correspondent, joins us. Anne-Marie, I'll use the president's words from the news conference yesterday. The situation in Hong Kong is deteriorating, and the Chinese government is not keeping its commitment that it made, how it would deal with Hong Kong. One country, two systems, that feels like a long, long time ago.
Yeah, exactly. The president in this advisory really is just warning, and what the president said, that's all it is. It's an advisory. We're not telling you have to stop doing business in Hong Kong, but we want you to know that what the risks are. And one of the things that this advisory is supposed to outline is really the legal risks now that the Chinese Communist Party has an entire really grip on Hong Kong. That's one of the things to keep out for, and the Biden administration is that these businesses need to keep in mind. Some of the legal threats that now are more subject to the Chinese Communist Party in mainland Beijing than would normally be on how they normally dealt with Hong Kong.
Anne-Marie, I gotta say, find me a CEO that says, wow, I had never realized that about Hong Kong. I wasn't aware of the dynamic that was percolating between the mainland and Hong Kong. What is the purpose? Is this purely messaging to the Chinese government that basically if they start cracking down on data and they start cracking down on U.S. IPOs of Chinese companies, that the U.S. will retaliate with these types of measures?
I think part of it is messaging, especially after we saw what happened with Didi, which many U.S. investors were a part of, given that IPO in New York. I also think part of it is they do want to map out the framework that there has been a change in Hong Kong. And we've seen that since last year with the national security threat law, what's happening in terms of press freedoms in Hong Kong with the Apple Daily Edition. So there are a number of things that have been stacking up. But of course, as you say, Lisa, it really is just another layer of the tit for tat we are seeing between Beijing and Washington. And while many were potentially expecting a softer tone from this administration on Beijing, it is not happening. They have kept all of those guardrails in place from the Trump administration, and they are going even harder.
And the Biden administration has the backing of Congress. I mean, this is the one bipartisan issue that we know that they agree upon, and we're hearing some agreement on putting money behind competing with China's Belt and Road. What's the latest on that in terms of how it gets rolled out and how much teeth there is behind that?
Well, just yesterday, the House Foreign Relations Committee advanced a bill. And as you say, there is bipartisan support in Washington when it comes to wanting to especially invest domestically in terms of being able to compete with China. This bill yesterday actually had a little bit of pushback from Republicans because they didn't like that there was a little bit of working together with China in terms of climate initiatives. But at the end of the day, there is support. And this is about making sure there's infrastructure also to make more chips in the United States, also to help other countries in terms of countering the Belt and Road Initiative, with President Biden spoke extensively about with G7 leaders in Cornwall recently while on his trip to Europe. And the other thing, of course, is that the United States is working potentially with other countries about a digital trade pact, and this would be 100% to deter China and just another way to combat China. But again, the difference between, and you could differentiate the Trump administration and the Biden administration, is that they're both talking tough on China, but President Biden clearly wants to do it in a multilateral approach.
So, Anne-Marie, while we're talking about U.S. adversaries, you have China on one hand, you have Russia on the other. Did we glean anything about the united Western approach to Russia from Biden's meeting with German Chancellor Angela Merkel yesterday?
They didn't really go into details regarding Russia in the sense of Nord Stream 2, except for the fact that they both agree that they should work hand in hand in terms of wanting to make sure that Russia does not use Nord Stream 2 as a way to coerce and to use their energy supply against Europe. This is something that President Biden said, although we are friends, you tell your friends the truth, and that he did bring up his worries about Nord Stream 2 with Chancellor Angela Merkel. But basically, at the time he got in office, the pipeline was pretty much done. I mean, that pipeline is more than 90% done. It's going to be done by the end of August. So we didn't get details, though, of what reassurances Germany is going to do to really protect Ukraine. And it's quite awkward for Merkel, I have to say. Her district in Germany is where these Russian vessels are floating and the end of this pipeline. But we do know that they at least had a united front in terms of how they could work together to deter the Kremlin.
Anne-Marie, that's the issue here at play for so many people, and Katie's right to go there. That news conference started yesterday with the President of the United States celebrating the tenure of Chancellor Merkel. This has happened on their watch. When we talk about the end of one country, two systems, the risk, the advisory coming from this administration, this has happened on their watch. What can they actually do about any of it to change the path we're on now?
Well, when it comes to Russia and Nord Stream 2, there's really nothing the United States could do except potentially to really sanction some of these companies that are in the final layers of building that pipeline, or sanction Germany. That is not something the administration is going to do because, of course, Germany is an ally and there's a lot of transatlantic trade and partnership there. But they do want to keep a closer eye on it, and they really are at this point just stuck with it. But Germany is also, and Europe is also in a precarious situation. Russia is also their direct neighbor, and it is where they have to get their energy supplies. I think right now what the Biden administration wants to focus on, at least, how do we protect the economic and national security interests of Ukraine.
Anne-Marie, good to catch up. Our Washington correspondent down in Washington, D.C., Anne-Marie Hordern. Lisa, these issues are going nowhere anytime soon.
What it does highlight, though, is that the fractures between Germany and the U.S., once very close allies, have not necessarily been breached post-President Trump, and this, I think, is going to be an ongoing theme with President Biden.
They're very good at singing Kumbaya, though, and holding hands, aren't they? There's a clear disagreement on some big issues there.
How much are you buying Kumbaya? Think they have campfires?
I don't think so. Lisa Abramowitz, Kelly Lyons, Jonathan Ferro, Tom Keene back with us on Monday. 43.54 on the S&P from New York City this morning. Good morning. This is Bloomberg.
What does it change?